I was going to say testosterone, but everybody gets offended at everything during the COVID, so can't say stuff anymore as a joke.
Oh,
So
happy Men's
that's
Day
not
to you
funny.
both, okay? Happy
What?
Men's Day to you both.
Happy.
It's International Men's Day.
We actually have an International Men's Day?
Yes,
What day was that?
November 19th.
It's kind of like Father's Day. It comes and goes and nobody knows.
no, but I see we share a lot in my different groups. We've been sharing it. Yes.
I didn't say anything about International Men's Day today.
Even on
Anywhere.
Facebook, but let me send it to you, Mr. Wilkins. Today, just send it to you too.
Yeah,
Wash
please.
your bowl.
I did wash on my
Because I didn't see
Okay, I
anything
just
about
forwarded
that.
it to you.
keep the dishes.
Okay. Shervin, Bean, Bank, Bean. Is it Shervin or Siobhan?
1 minute.
No, I didn't see it. Okay. Anisha is there. Anishka. So Anisha and Anishka are not the same.
Nisha, you know that's how I get my nickname, right?
Oh. So Anishka and Anisha are the same?
No, we're two separate people.
Okay, just checking. Because on my screen, Anisha is sitting right under Anishka, but I know sometimes folks use like a phone and a like.
No, when she and I started working at First Caribbean together, you had the same branch, and people used to get our names mixed up too.
I can
That's
say
how
mine.
that's how I got my nickname. But everybody called me because of that.
Okay, so Anisha is somebody else, Anisha Smith. Okay. It's different from Anishka.
Right.
Hi.
Yes, I'm here.
Hi, Anisha.
Hi.
Does anybody call you Anishka?
No.
Oh, okay. Just checking. A lot of people call Anishka Anisha.
Yeah, her name is unique because she didn't have the H.
Exactly. Exactly.
Good afternoon. Good evening.
Hi. Hi. Who said good evening?
That's
Is
shit.
that Siobhan?
Hello.
Did I pronounce that correctly?
Hello.
Hi. Siobhan Bain? Okay.
Hi, it's Shadell McKenzie. I'll just put my phone on mute because I'm trying to get home.
Oh,
I should be home
Shadell.
in about, yes, I'll be home in about 3 minutes. But
Okay.
I guess you can.
That's fine. Not a problem, Shadell. So that only leaves Siobhan.
I think Shavane is on, no?
Shavane. Shavane Bain. Okay. Oh, she says, she's there. Okay. I am here using my phone. Yes, I'm here. So you can hear us then, Shavane. Okay, great. That means you don't have an audio to say yo, hello, hi, good night, all that stuff? Oh. Okay, Siobhan, that means then if there's something going on, we'll have to communicate via the chat then. Let me practice my chat thing. Sorry, I'm talking to Siobhan through the chat thing. She doesn't have audio, so I'm taking this. How do you send your chat message? You just press enter? Anyone?
Yeah, just press enter.
Enter. Okay.
There you go.
Okay, great. I was looking around for the usual send thing, like send. Okay. Need to send an email to Zoom and tell them they need to put a send button. Okay. Let me just put my information up while we wait for Shadell, who should be joining us very shortly.
I'm on. I'm just on my way home.
Okay, you can hear me then.
Yes, loud and clear.
Okay, wonderful, wonderful. Then I can get started. Once you get in and put on your pajamas and sit down, you can let me know you're in. Shadell, that would be fine.
We'll just give me a few moments.
No
I'm
problem.
turning to the corner in the
No
yard.
problem at all. I had asked the Institute, I'm like, since I'm home lecturing, can I lecture in my pajamas? Is it no? That wouldn't be good protocol. So I had to take off my pajamas, I guess. Okay, here we go. Some information first. Let me just see if I can share this with you guys. Share screen. Can you see that information?
Yes. Yes.
Okay, great. Maybe you might want to write that down somewhere because I'm the guy who will be chatting with you and having you chat back to me for the next couple of sessions. That's my email address. Please write it down somewhere in case you need to send me an email for whatever reason. And of course, my cell number. If you want to send a text or give me a call, feel free to do that. So how have your sessions been going so far? Anyone?
The sessions are okay. I know we covered some stuff that we did prior before.
Oh, you did?
It's like it came back from stage 1.
Mm.
Some of the topics.
Okay, can you think of one of the examples that we would have talked about before?
Hold on, what's the thing name? Like with the Smith case.
Okay. Now, you're assuming that we all know what the Smith case is. I'm just teasing you so you could say a little bit more about the Smith case.
I know.
Yeah. What was the essence of the Smith case anyway? Does anybody remember?
The trustee should take things into consideration, like nature of the request, stuff like that.
Indeed, indeed. And also, when you're studying the cases, please don't try to study them in complete detail like lawyers would have to do if they're preparing for some law exam. For your purposes, you just need to know the core parts of the case. Like, what is it about? What was the discussion? And what was the result? You follow?
Yes.
That kind of stuff. Now, if you feel like really froggy and you want to get down into the details, there's nothing wrong with that. But for those persons who don't want to go there or who don't have time, you do want to just focus on the main aspects of the case, and maybe leave the details for later when the session is over and you have a little more time to get into it. Okay? But most importantly, just the core parts of the case is good, because sometimes students get bogged down in trying to remember too many of the details of the case, which is not a bad thing. But for some students, it's not always a practical thing, given all the stuff to study and all of the responsibilities as well. All right, does everybody have my contact information? Yes?
Yes, I have it.
Okay. And since Kermit has it, I will assume we all have it. Hell of an assumption.
Yes, I have it. It looked like it was already saved.
Sorry?
I think it was already saved from the last class because it said I already had it.
Indeed, indeed. That's right. That's right. Correct. Now, you probably would have figured out by now. And if you haven't, let me just say, my classes, I try to keep them as interactive as possible, which means that I do some talking, but not all the talking. I encourage students to chit chat as well about anything they want to that's related to the case, related to any other issues of trust. And sometimes if it's a non-trust issue, but it's something you need to say, please feel free to say it. It doesn't have to be directly related to trust, or it might be, okay? So feel free to talk whenever you feel like talking. You don't have to wait until the end of my lecture, the next class on Saturday morning, and all that kind of stuff. I don't mind an interactive session. Also, I will be calling on persons to do some reading, because for two reasons. One, a lot of times I found that working students in this particular course sometimes don't always get to the material as quickly as they want to. And so the reading lecture sessions tends to be very helpful for them, not only the reader, but also the listeners. You get a chance to deal with it directly, as opposed to on a sleepy night when you're like, you know what, I'm just reading this because. Okay, so we'll have some of that. And during the reading, you know, I'll jump in sometime and say stuff, and sometimes I won't. Stuff like that. So it's going to be as interactive as I can possibly make it, and try and get everybody as involved as possible. What else? Of course, for the next 4 sessions, tonight we'll be talking about trustee investments. And then on Saturday, we'll be talking about trust accounting. And then next week, Thursday, we'll be talking about special assets and underlying companies. And then finally, forced airships, asset protection trusts. Okay, so we have quite a bit of interesting things to chit chat about. What can anybody remember what some of the topical issues you discussed before this class? And what other areas, what other topics? What comes to mind before this session? Anybody?
You mean for the course?
Yeah, so far in the course. I mean, have
Um,
you studied, for example, the 3 key elements of a trust? Again? Did that come up again? Discussions on the settlor, the beneficiary, the trustee.
mhm.
Or, for example, did you have any discussions about taxation and trusts?
I don't think we talk about
I
taxation.
don't remember the
Shit, I
taxation. We only talk about the stamp duty one. But
Okay,
not
stamp
tax.
duties. Okay, that's one aspect of the tax issues. What about the duty of confidentiality? Did you have that conversation?
Yes.
Yeah. What's so important about the duty of confidentiality? Like, why do we discuss that at all?
You can get fined. If you breach it, you can get fined. I think what it was, 10,000, 25,000, something like that.
Yeah, trustees, like bankers and other financial services people, have an inherent duty of confidentiality, whereby you cannot just go around and chit chat about the business of the trust as you see fit. And in many jurisdictions, there are penalties. Okay? So the issue of confidentiality is a huge one. All right. What about the trust documentation? Did you talk about the instrument, the trust instrument?
Mhm.
Yeah, what is the trust instrument? Anybody? The trust instrument, what is that? What's another name for trust instrument?
Oh, I can't remember the next name for the trust instrument, but I mean the trust instrument is I guess the part of the trustee that
Yeah,
deals with
absolutely. That's the word I'm looking for. The trust
trustee.
deed.
Did. Mhm.
Yeah, that the trust deed, you should know by now, is the Bible for trustees, is it not? As a matter
Yep.
of fact, trustees are not required to do anything until they consult the deed to see whether or not the deed allows them to do anything at all. Because you remember that if they do something as trustee that violates the deed, they could be found to be in breach of trust. And I think you have an idea of what those consequences might be. Anywhere from losing the client to being fined to maybe even ending up in prison, depending on the nature of the activity. Okay? Because remember, trustees are not allowed to violate the conditions of the trust deed. They're not allowed to act ultra vires the trust deed. They can only act within their powers that are outlined in the deed. Okay. Now, when the deed is not clear on a particular matter, what other options does the trustee have? There are two other options. Anybody remember what they are? Other than the deed. What about the Trustee Act of 1998? What is that all about?
To set out the guidelines for various trust companies to use in adherence to the trust instrument.
Absolutely. So if the trust instrument does not provide the necessary guidance, then we have the Trustee Act that is the legal or the legislative requirement in the Commonwealth of the Bahamas, and every jurisdiction who offers trust services would generally have such legislation to govern the affairs of the trust, especially for matters that are not directly clear or spelled out in the trust deed. And we should know by now that when the deed and the legislation does not clear things up, what's the final option that we have? Anybody remembers what the final option other than the deed and the legislation?
Yes, the court. No.
Yeah, the courts, of course. Okay. And so, yeah, that's kind of like the foundation that swirls around the activities of trustees, which now takes us into the other section of what we call trust admin 2, which is about trust investments and trust accounting and trust special assets and all the and some special vehicles that we call trust protections vehicles, and we'll see how they work a little bit later. So a lot of little bits and pieces to keep swirling around. So make sure you stay on top of your reading all the time. Every time you get a moment, pick up the trust text and read a little bit. When you get up at night screaming from a nightmare and can't sleep, just go ahead and get your trust text and read it. Okay. So I just need you guys, before I go on, to introduce yourselves. Tell me who you are, and anything else you feel like telling me so that I can know who I'm talking to for the next few sessions. Okay, 12 hours in total. That's a lot of hours, one way or the other. All right, so why don't we start with at the bottom, Anisha Smith.
How did I not know?
You had that feeling?
Yeah, I had a feeling you can call me first.
What gave you that feeling? Because you're at the bottom of my list.
I have no idea.
That's interesting. Okay, Anisha, let it rip.
Name Saturday.
Yeah,
Um,
you start today.
okay, what all you want me to say?
Anything you feel like saying. Introduce yourself, like who
Okay.
you are, where you work, anything you feel like saying whatsoever. Why you doing
Okay.
this class?
Alrighty. My name is Anisha Smith. I work at Gateway Ascendancy. It's a collections agency. I'm 33.
Oh, you're a babe, smuggling clothes, lying in a.
I'm a baby.
You are.
I haven't heard that in a little while.
Well, you are. Only 33? My. Just getting started.
Yeah. See, I'm trying to take this course to have a better job. Hopefully.
Okay.
Praying
so-
that I pass it.
Well, praying is okay, but remember the Bible says faith without.
Works. It's that.
Yes, so
I
don't
know.
stop praying, but make sure you keep
But in
studying.
the work too, right?
Correct. If you do the two of them, you will be fine.
I
If
should
you
be.
don't, you're gonna have some troubles along the way. So now you know what to do. All right. So you're thinking about working in financial services sometime in the future? Like,
Yeah, I worked at CIBC and then I worked at Commonwealth Bank. Now I'm at Gateway Ascendancy. So hopefully I get to work to offshore after this.
offshore. I was about to
Yeah.
say, like, who the hell leaves CIBC?
Mr.
My
You
boy.
laughing, eh?
Yeah, for some people, CIBC is their what? Dream job.
Oh
Like,
yeah?
yeah,
Never
like
heard
they
that
never,
before.
ever want to leave.
I know. I just spoke with someone now that want to leave. Been wanting to leave for years.
I know. Actually, I was just being facetious because it's interesting. But for some people who are on the outside, see, it's like watching like two married people. You said, "I wish I was them," but are you sure? Because you don't really know what's going on where.
Yeah.
On the
Exactly.
inside. Yeah, a
Mhm.
lot of organizations like look that way. When you walk in, it looks like, wow, I'd really love to
Right.
spend my life here like that.
Right.
Oh, everybody looks happy. When in fact, once you get in, oftentimes the reality is, I need to get the hell.
Ouch.
Absolutely, absolutely. Okay. So I get it. And then same thing for Commonwealth. Some people are dying to go to Commonwealth, and a
Yeah, I
whole
know a
bunch
lot
of
of
people ran out of Commonwealth the other
Yep.
day. Yeah,
Yep.
earlier this year and last year, like a whole bunch of people ran out there like they were criminals
Yeah.
in prison.
I know. I left. I was one of them last year.
I get it because a lot of people don't realize that some financial institutions you are like a criminal in prison
Mm-hmm.
because the way the organizations are run and the persons who are running the various areas, they're like task masters with all kinds of strange
Yeah, man.
idiosyncrasies and all kinds of power trips and all
Yep.
kinds of other things
And
are going on.
bullying.
Yeah, bullying. Let's not forget that.
Mm-hmm.
Like, you want this flicking job, you better do whatever I say.
Oh, that's how they
Kind of
got.
attitude. Yeah,
Yeah.
it's sad, but it's true. So trust me, I was only teasing when I say who the hell leaves because I've done completely, and there are a lot of other people just waiting for a prison riot so they can break out or something to get out. All right. I saw a video not too long ago with a young lady. She was a CPA. She's a CPA, and she had a quote unquote great job with one of the big four CPA firms, auditing firms. And basically, in her interview, in her video, she was talking about some accounting stuff. And then she says, I work for a middle-sized auditing firm now, no company, and I get to make decisions in that company, and they love me. Then they appreciate my work, and I'm happy to be out of the big four. And most people be like, "Are you kidding me? Who the hell wants to be out? Shouldn't everybody want to be in?" Not everybody.
Yep.
Okay. So yeah, thank you for that, Nishka. A bit of enlightenment for those of us who think that the grass is always greener on
The other side.
the other side. All right. Good luck. Good luck. Okay. Nishka.
Hi, I'm Aniska Russell. I work at Central Bank as an exchange control officer. I am one of those who left CIBC last year.
Okay.
Uh,
So you were in that rush. Yes. Yes. So
Yes.
how's it at Central Bank these days?
It's good, busy. I'm glad we still have a lot of business, so it's good.
Absolutely.
Been
Absolutely.
working from home from March, though.
From March of this year.
Yes, from March till now. Yes.
That's amazing. So what is this work from home thing like? Is it like weird or you've settled into it now?
I'm used to it now.
What do you-
Everything on my laptop is on my work computer, so I'm used to it.
So what are you gonna do when they call you back in? Like, come back to work in the office.
I think I'm gonna be excited. Hopefully COVID clears by then. And I can make sure I wear my mask. But I think I'll be excited to see people again.
Okay, so you're looking forward to going back.
Yes.
Okay. I'm sure that most people feel that way, one way or the other.
Yeah, though.
All right. Well, welcome aboard, Anishka.
Thank you.
Joanne, are you there?
Yes, can you hear me?
Yes, I can.
Okay, this is Joan Ramming.
Joan, yes.
I think all of you know me.
Except me. Do I know you, Joan?
Yes, Mr. Wilkinson.
Doggone it. I thought that name was familiar.
One. I am still with CIBC.
You're still there?
Yeah, she's still there.
Oh, so Joan, who has a gun to
23.
who has a gun to your head there? You did,
I would like to run away, but let me say that on the.
you decided to stay incarcerated.
I don't want to run away to another financial institution
Ah.
because I think they're all the same.
You don't want to go from the frying pan to
No. I've seen too many people do
yeah,
it.
that's
So
true. That's the other side of the issue.
I've heard exactly what you said.
Yeah.
Some people said, "Oh my goodness, I wish I was working for your organization," and then they came, and then it was a different
Yeah,
story.
they're like, my
So,
God.
yeah, what did I get myself into?
Yeah. Yeah, it's unbelievable that it happens that way, but oftentimes it does happen that way. And you have to be a certain kind of animal.
Still fortunate that we're considered essential
Yeah,
work, essential businesses.
indeed. But I get your point completely. And you're doing this course because,
I switched roles earlier this year, so I'm now on the trust side.
oh, so this is perfect for you then.
Something new, yes. So I needed to come up to speed.
Excellent. Then you are definitely in the right place. All right, so I trust, at least in my sessions, that I can leave some stuff with you that will be helpful for you in the trust world. Okay, it's a very unique animal, trust, and it doesn't conform to anything except itself, which you'll discover eventually if you haven't discovered that already. All right, I'll come aboard then. Shadell, are you there?
Yes, good.
Hey.
Yes, I am.
Good
I
evening.
am. Good evening. I'm Shadell McKenzie, and I'm employed with the Private Trust, and I love gardening.
You mean like going down on your knees and bruising them up and playing in the dirt?
Yes, and weeding and planting and harvesting and all that good stuff.
So what are you doing at the bank? You sound like you should be like in agriculture, leading the charge to feed the country or something.
I'll get there soon.
Okay. The thought did cross your mind.
Yeah, it was something I studied for a long time before I went into banking. And, it wasn't as compulsive as it is now. It's almost like that's the way we need to go. So
Yeah, it is.
I kind of picked it up again. I mean, I practiced it a lot of years, but over 10 years I kept at it, but it's more and more I see myself eventually going back into the industry. It wasn't a really respected industry 20 plus years ago.
Unfortunately,
Yeah.
not a
Though
COVID.
needed, though needed, not respected.
Yeah, it's absolutely critical. And the same way we're putting all this money into small businesses to get
Yes.
financials and retail services going on, we need to finally get serious about agriculture on a sustainable basis.
Yeah.
I keep saying everything we make, grow, and manufacture in the Bahamas saves us foreign currency. I don't know why we don't still seem to get that for some reason. I don't know. Sometimes I feel like
I think it's more the government is the reason why, because they make more money when these stores import products, and
yeah,
we depend a lot on importation fees. And
yeah,
so if you make it easy for persons to import um, stuff, goods and produce and all of that, um, they would never support local farmers. You know,
yeah,
if
unfortunately.
you increase the fees on these things so much, it'll almost force persons to buy at home. But then, there's also a supply and demand factor. You have to be able to service properly the market,
Indeed.
and so it's like it has to be nurtured a whole lot more
Yeah,
before we get there. We're talking a lot about it, but it's like mass planning, and it's a lot of organization.
no question about it. I see a
Hmm.
couple of little farms popping up here and there, and
Yeah,
the produce exchange, when things are
yeah,
picking, is filled with stuff for a little while. The question is,
yeah,
do we have the ability to produce sufficiently? Uh,
yeah. That's a factor.
yeah,
Especially how we over here and we're in a hurricane place. Farmers cringe when it's a hurricane coming because there's almost no way to protect your crop. And if all the farmers lose all their crops, then where do we get it from? So
yeah,
um all types of different things that go into that. But the
yeah. It is.
biggest thing is the government.
Yeah, it's not a simple problem.
No.
Nobody else will be interested in that kind of capital intensive program that is required, other than if it's not
Yeah.
the Ministry of Agriculture and the government. And
Yeah.
for 40 years plus, 50 years plus, even before what we call the majority rule group came into play, it was not ever really a priority.
No.
So yeah, so we do have a lot of work to do, Chanel. No
Yeah,
question.
we do. We do.
Um, my. It's another burden along with all the pandemic and all the other issues, but it's definitely something. And even the stuff that we used to have, like the pineapple industry in Eleuthera, is gone.
It
And I'm thinking
it
like,
is?
well, I don't see any big deal about it. All I see is murders on the front page. I don't see any big fat pineapples.
Jesus.
Maybe they might be there,
No,
but
man, pineapples take so long to grow. They're still thriving. I mean,
the
not as much as they used to, but people still get a lot of pineapple from them.
okay, that's
I think a couple of their farmers do more exporting
that's
because they
fine.
make more when they export.
That's fine if they're exporting, because then
Yeah,
that's a good sign. As long
yeah,
as they're out there growing them. Okay.
yeah. They
So
take so long to grow though, but
yeah. Well, the great
apples take
stuff always
about,
takes longer. That's the other thing.
yeah,
Um, but whatever works for us, we have to find it and just keep hacking at it. And whatever the government needs to subsidize and finance, do it. The hell with it, tax some rich people and do it. Don't we
right.
have some rich people we can tax?
I think
Yes,
our
we do.
problem's bigger than that. I don't
And
know.
well, we're always taxing poor people, aren't we? Like VAT
Yes,
this, VAT
sir.
that.
Yeah,
So why don't we
yeah.
tax some?
rich people.
Yes. And then put it into agriculture and fish. Well, okay. Some people might say, well, is that a trustee issue? Yes, it is. But who are the trustees for this country? The government. We have appointed them
Yes,
as our trustees, have we not?
yes, we have.
Absolutely. And
We have a
we,
fiduciary rule.
yeah, so we, the people today, appoint them as trustees. And who are the beneficiaries? Future
We are.
Bahamians. So
Yeah,
it is a trustee issue.
yeah.
Except that nobody seems to think of it that way for some reason. Like, really? I don't get it. I'm like, I know that's why we're still where we
Are.
are. All right. So way to go, Shadell. If you love it, let it kill you. If you need to go back and do your thing. Because you have to do what you love ultimately. Or
Yes,
you-
eventually.
Yeah, otherwise you'll be miserable. Don't mess with Kermit, whatever they're doing. You do what you're doing. All right. Thank you
Poor
very much.
Kermit.
Okay, Kermit, let it rip.
So Kermit Ferguson, work at Gateway Ascendancy.
Okay, with Anisha.
Yes,
Do
yes.
you know Anisha?
Yeah, I know Anisha.
Okay, just checking.
What else? Oh, what else I gotta say?
Oh, why are you doing this class?
Um, I mean, I have an interest for trust. Originally, I got in the class because Anisha said she's gonna do the class. I do the class with her, but
Okay.
yeah, so
So how
she
the
just
hell did she
discussing.
persuade you to do it?
She just was discussing it one day, sitting next to me, and I was like, "Oh, I do it with you," and I am doing it. I just came to class and do it with her, but I've learned to have some interest in it, so it's nice.
Well, let me put it this way. Um, all learning is a good thing. If she was able to persuade you, that means Anisha must be pretty persuasive because now she dragged you into paying fees, studying, doing classes.
Niska too.
Who else?
Niska too.
Okay.
Yeah, yeah, Nisha got me in it too.
My God, Anisha, look at you in the wrong business. You need to. How did you persuade them to do it? It's amazing. I'm glad you did, and they will not regret it. I was about to say, all learning has its substance, even if you're not practicing what you're learning immediately. There are other things about trust, even if you're not a trustee, that you will have that's important to know for your own life, even if you don't realize it yet, because you're only like 20 something or 30 something, like a little babe in swaddling clothes. You don't get it yet. Okay. But there's always something in it. Because, say, for example, trusteeships are like drawing a will. When you write a will, everybody here knows what a will is, don't you?
Yes.
I hope.
Yes.
Yeah, it tells you write down on a piece of paper who you would like to inherit, whatever you leave, even if it's $10.37. It's your $10.37, and your will says, I want you to give this to charity. And then in your will, you can also say, make sure I don't give none of this $10.37 to my husband, because chicks don't like to leave money for their husbands for some reason. Any reason for that, ladies? Ladies to leave money
Nope.
for their mom, their
You all
sister,
know why.
who said that?
Shadell.
Yes, my foot. Kermit, what does she mean?
I think I should
Y'all,
explain that.
Should I
y'all,
explain?
y'all don't have a respectful waiting period. That's all I say.
Oh, what is a respectful rating period, Shadell?
I don't know. It ain't 1
10
month.
years.
It doesn't work. This is funny. Shadell said, it sure said this in 1 month. Anisha said 10 freaking years. Either way, Kermit, when your wife dies, you just go join the convent and be a
Uh,
apologize. Don't hurt your head about all the blood.
No.
In other words, what she's saying is, don't remarry, you bastard.
That's it.
Yeah. But guys are always leaving stuff for their wives. They don't care what the period is.
We
Like,
more
Because they know she's
considerate.
a good
no,
woman.
no, it's funny.
Yes.
No, doesn't matter whether
Yes.
she's good or not. She has to be like a witch for him not to leave it. But other than witchship, he'll leave it like this is for my wife, like that. And then somebody's like, you leave it all to your wife. She's mainly, I don't care, it's my wife. See, like we have this wife thing, but our ladies don't always have the husband thing. Like that's my husband. Not necessarily.
You get
What's,
5%.
what's the problem with that, Cameron?
I know. I don't know.
So I mix up.
Kermit, you know.
Okay. See, Kermit, you know, dude. All right, Kermit. So, even though Anisha persuaded you, I'm sure you will not have any regrets at the end of the day. All right.
Yeah,
If you
definitely
don't
not.
use this immediately, there'll be stuff in this stuff that you will need eventually somewhere in terms of understanding how wills work and how probates work and what assets are and why they're important and what means to own something and the importance of beneficiaries and who they are. There's a whole lot of stuff to learn for your own personal benefit long before you ever get into any kind of trust environment. That's the point. All right.
I agree.
So welcome aboard. All right. Last but not least, Siobhan. Where did Siobhan go? Internet. Okay. Guess she'll join us shortly again. Okay. So having said that then, before I actually start my lecture on trust investments for today, I do have a short video clip that I would like for you to see because some of the things that Tom Jones will say in this short video clip is connected to what we'll be discussing. Siobhan, are you there? To what we'll be discussing this afternoon with regards to trust investments. Specifically, he's talking about if you're a beneficiary, for example, and you're not happy with how your trustee is managing your trust assets or the trust assets in terms of investments or otherwise, that, hey, we are lawyers and, lawyers always waiting to litigate. Does anybody know why lawyers are always anxious to litigate?
That's how they make their money.
That's how they make all of their millions. Let's say it right. That's how they make, well, not all of them make millions, but yeah, that's how they make their money. So they're always encouraging people everywhere. If you break an ankle, call us. If you're in an accident, call us. If your trustee is not investing your trust assets correctly, in your opinion, call us. Whatever it is. If your husband touches you and you want to get him locked up for abuse, call us. We'll help you to fake the bruise on your shoulder so you can go to prison. Do they actually do that? And at least Anisha picked up on what I'm saying. I hope they don't do that, okay? And I hope none of you guys do that. I was telling some young men the other day who bothered to ask my opinion because nobody wants your opinion anymore. But they were bold enough to ask my opinion on something, and it involved this thing about abuse. And I was trying to tell them while I had the opportunity that no matter what your wife or your girlfriend or any girl tells you, do not touch her. Guys are still abusing women for some reason. I keep trying to tell guys, stop that garbage. You're wasting your time. It's wrong. You're going to end up in prison. You're going to be locked up. You're going to be this and you're going to be that. Don't do it. And oh man, she get me mad. I don't care what she gets you. Don't do it. She called my mom black. I don't care. Don't do it. She called me stinking. I said, I don't mind. I don't care what she says. Don't touch her. But a lot of guys still don't get it. They keep ending up in trouble over and over again. So, Kermit, since you're the only guy on the thing, I'm saying to you, even though I'm trusting it doesn't apply to you, tell your colleagues, don't do it. Stop touching and manhandling our women. Agree?
Yeah, I agree.
I don't care what she tells you. If you can't take what she tells you with her mouth anymore, because women are a little mouthy by nature. If you can't take it anymore, you tell her Like Isaac Hayes sang the song, like, if you don't stop, I'm going to leave. He said, no, 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 no. I said, if you don't stop, I'm going to leave. That's the last time. The next time you do it, I'm going to leave. Then what do you do, Herman?
Go
Leave.
outside.
No, don't go.
It's curfew. Where you going?
As soon as the curfew is up, go home to mother. When she calls you, tell you you can't take it no more and you don't want to get into any physical abuse. You can't take verbal abuse either. Okay? All right. So that's a lot of that crap is going on. Does it have anything to do with trust? I don't know. Maybe. Maybe if a beneficiary gets a trustee angry in a meeting, then the trustee might try and clip the beneficiary because they lose their temper. Hey, everything's related to trust all of a sudden. These things are real, they happen. Okay? So just little byproducts. All right. So my video then. Take a look at this video. And then when it's done, we'll begin our track towards trustee investments in Unit 6. By the way, for my sessions, at the end of each unit, there are some questions. Have you seen them? The unit questions, anyone? Have you seen them? Hello?
You
Yeah,
mean
on
at the
page
end of the
59.
chapter?
Yeah, at the end of the chapter.
Oh, okay.
There are some questions for the unit. So what I'd like for you to do, each time we're done with the unit each week, I'd like for you to go home and answer those questions. And then when we come here, when we meet again on Saturday, we'll take a few moments and discuss the questions, and then we go into Saturday's lecture. And then at the end of Saturday's lecture, we go ahead and do the unit questions that way. So that in addition to our lectures and our readings, the answering of the questions will take you back into the text and help you to solidify some of the concepts in your mind. Okay, that's the whole idea. It's not designed to make you miserable or to waste your time. It's really designed to consolidate a lot of the concepts that we actually discuss. All right, so let's have a look at this video and then we begin. Let me see if I can get this on my share screen. Video. Can you guys see that video?
No, I don't see a video.
Not as yet.
Not as yet. Okay. We do not. Do you see it now?
Yes.
Okay, great. Do you still see it?
Don't see
Yes.
Okay, fantastic. So let's listen to Scott for a moment, or two or three or four. Scott is a trust litigation attorney, which means that he's a lawyer, but he's a specialist. Okay? He's not a criminal lawyer. He's not a corporate lawyer. He's not a divorce lawyer even. He is a trust litigation attorney, which means that all he does every day is to take trust issues to court that are brought to him generally by beneficiaries who are unhappy from time to time with the management of the trust for which they are beneficiaries. Okay? So welcome to the real world of trust. It's not all about hunky-dory about people getting distributions from the trust every year and then everybody go off and go on a spending spree. Oftentimes there's trust litigation practically every day somewhere in the world where beneficiaries are suing trustees, and sometimes trustees are suing beneficiaries, and then sometimes settlers are bloody suing trustees and so on. So there's a lot of suing going on in the world of trust. And so Scott is one of those guys. And so he's going to give us a little bit of feedback on trust litigation in terms of trustee investments and their responsibilities. Okay, here we go.
That your trustee is doing a poor job investing trust assets. Is your trustee failing to discuss the trust finances with you or find out what your financial goals are?
Can you hear Scott?
Yes, I can
Okay,
hear him.
great. So you notice right off the top, he starts giving reasons why he litigates, because beneficiaries are not happy with the way trustees are managing their investments and the trust assets. Sometimes beneficiaries want information from the trustees And for one reason or another, trustees withhold information. And if they keep doing that, beneficiaries get a little upset. And so they go to the lawyer and say, look, I am a beneficiary of this trust. I'm asking for information on how the trust assets were invested, or how much is sitting in the bank account, or whatever the case, and I cannot get any answers. I need you to come to my rescue. And let's go to court if we have to. It's that important to me. Okay? That's what Scott does.
Well, let's talk about what to do. By the end of this video, you will know, first, what your trustee must do when investing trust assets. Second, how trust assets should be invested when the trust calls for an outright distribution, and how trust assets should be invested when those assets are held in the trust for years.
By the way, does anybody remember what a trust distribution is? Anyone? Well, if you're a trustee and the trust instrument or the trust deed says, I instruct you as my trustee to give my spouse $100,000 every year for the rest of his or her life, then the trustee is obligated by the trustee every year to pay out $100,000 to the spouse. That $100,000 that is paid out is called a distribution. And that part of the trust activity is a very significant part of the trustee's work. And oftentimes that is an area where there's a whole lot of litigation, because oftentimes beneficiaries are not satisfied with the amount that they're getting. They feel they should get more, especially if it's a discretionary trust, or they feel like the trustee is paying them their money's too late or not paying them frequently enough. Whatever the gripe is, when it comes to money, litigation is rampant, okay? Because people are always looking for more money and faster, all right? So that's what a distribution is.
California law says a trustee shall invest and manage trust assets as a prudent investor would.
Does the Bahamas Trustee Act also say that? Anyone?
Yes.
Yes, it does. Yes, it does. The trustee shall, not only in California, in the Bahamas under our act as well. Okay? Something, an important thing to know.
Considering the purposes, terms, distribution requirements, and other circumstances of the trust. In satisfying this standard, the trustee shall exercise reasonable care, skill, and caution. This is referred to as the prudent investor rule.
Correct?
Yeah.
Is that indeed the prudent investor rule?
Yes, it is.
Okay, it certainly is. You should have seen that before, certainly in part one, if you did part one. And maybe there was a little discussion earlier about that as well. But that prudent investor rule is a very important concept in trust investments. Okay, and it means that the trustee cannot invest the trust assets recklessly, however he or she feels like it. They must be prudent and wise and invested like they would invest their own money. Okay, no foolish investments, no risky investments. That's what the prudent man concept is. So if a beneficiary feels, for example, that a trustee is investing their money recklessly in a particular area, they have a right to get an attorney if the trustee does not satisfy them and try and find out why. And maybe even establish that the trustee is acting in breach of trust as a result of his reckless investment practices, on the principle that he is not exercising the what? Prudent man rule. Absolutely. Okay. So this stuff is really all connected once you start learning how to connect the dots.
It requires a trustee to invest trust assets in a way that's appropriate for the trust beneficiaries. It prohibits the trustee from investing trust assets using their own standard. If the trust calls for outright distribution of trust assets, then you should expect that the trustee is not going to have to engage in very much investment management. The trustee should be preserving assets. The trustee may need to sell some assets to generate cash, either to deal with expenses and liabilities of the trust or to equalize distributions among the beneficiaries. But as far as engaging in any sort of sophisticated asset management, that should be unnecessary when there's an outright distribution. If the trust requires retention of trust assets for an extended period of time, let's talk about years, then you can expect that there's going to be a greater degree of investment management over the trust assets. The trustee will need to consider the current age of the beneficiary, the holding period, and the purpose of the trust. Will the trust have to pay for school, medical care, or the purchase of a home during the holding period? Is there an outright distribution at the end of the holding period? How much risk is the trust beneficiary willing to take, and why? All of these factors have to be considered by the trustee under the prudent investor rule. And there's a strong likelihood that the trustee will need outside professional management in order to help them meet the standards of the prudent investor rule.
Now, let me say at this point, while I remember, we have two situations here. One, where the trust has been established purely for distribution purposes. So somebody leaves a trust for $10 million and they say, the settler says to the trustee, you have to pay out $50 million a year, sorry, $50,000 a year to my beneficiary or beneficiaries until such time as the trust runs out of funds. In a case like that, that is a pure standalone distribution trust. So everybody's clear, it's very straightforward. Every year on the 31st of July or whatever the date is, the $50,000 is sent out to the beneficiary. Under those conditions, you don't, as a trustee, you don't have to spend much time worrying about investing the funds because the funds have already been earmarked just purely for distribution until such time as the funds run out. Now, on the other hand, he mentions the fact that what happens if it's a trust where you're holding the assets for, let's say, 50 years. Now, all of a sudden, there are no regular distributions coming out of this trust because it's a whole trust. And therefore, the trustee now has to be thinking, well, if this trust is for $50 million, I could hold it for 50 years and don't do any investing, but then I would be negligent in my responsibility to grow the trust by investing prudently in the market so that I can increase the 50 million over the next, 50 years to whatever that could be. So now this becomes the trustee's responsibility. Since this is a holding trust, a holding assets trust with no regular distributions, what kinds of investments as trustee do I need to consider that are prudent and are sensible and safe? And therein lies the dilemma for a trustee who has a holding assets trust. Okay, it becomes a little bit more challenging. In some cases, a lot more challenging than just a trust where you're purely making distributions until the funds run out. Does that make sense, everybody?
Yes.
Yeah. Okay, so just keep those two types of trust issues in mind when we're thinking about trustee investments. Okay. Again, if he's just paying out every year until it's gone, no major investment decisions to be made. However, if assets are going to be held in the trust over a long period of time, 10, 20, 50, 100 years, some trusts are legacy trusts. They've been around for 2, 3, 4, 500 years even, right? Then it raises the question every year, the trustee has to be thinking, how can I invest the trust assets safely and prudently? Because he knows that beneficiaries are always watching. That's the other thing, to see whether or not the trustee is acting prudently with those trust assets, especially when the trust assets are in the millions and gazillions of dollars. Okay. All right.
The prudent investor rule is particularly important where trust assets are held in the trust for an extended period of time. Now, I've just discussed how that can happen because of the terms of the trust. But the other important way this happens is where a trustee has failed to be diligent in managing the trust. So usually this happens where the trust calls for an outright distribution, but instead of that happening, a trustee holds onto assets for years and years and years. When that happens, there's a very significant chance that they have breached their fiduciary duty under the prudent investor rule. If this is your situation, then feel free to contact us. If you're not yet ready, then take a look at our trust litigation playlist, which will give you plenty of information about the entire trust litigation process, including what damages may be available to you.
All right, so there you go. Just a little chit chat about the realities of trust investment and how it's not as simple as putting some money on a CD in a bank somewhere. It does involve a whole lot more than that. As a matter of fact, sometimes it even ends up in litigation, okay, or legal action, for sure. All right, now, of course, while I am chattering and splattering along, please, if you have any issues, questions, comments, feel free to jump in. But until then, let us get started. Let me just bring up my page here. I believe you all have your notes, yes?
Yes.
Okay, so I can just bring up my thing here where I can see it clearly. Okay. Can you see my notes as well?
Yes.
Okay.
I
Now
mean,
my notes.
half of the page, yeah.
Yeah, I know, because I have it all on this big broad thing, so I can like read it. It'll be fun to read, as opposed to the itsy bitsy, not so fun to read thing or see. All right. So, and of course, you don't necessarily have to rely on this scratchy set of notes that I have. This is just me doing my thing as I go through. So, trust investments then. Involves quite a number of activities. For those of you who have not read this yet, that's okay. You'll get around to it, not to worry. You would have seen that our discussions will center around what we call the fundamentals of trust investments. A little discussion about the law relating to trust investments, because there are some legal implications as well. Also, how do we go about integrating our knowledge of trust investments and resolving issues involving investments, which is what Scott was trying to talk about. If you can't get it resolved, call us at this number, that number, the other number. And then finally, how do we make decisions about which kinds of trust investments to make and under what conditions? So that's what we are going to be basically talking about in this particular unit. Now, notice our discussion opens up about using the term primary duty, very first line of the trustee, is to determine whether or not to invest funds for the benefit of beneficiaries. Everything the trustee does, you should know by now from part 1 and certainly part 2 already, that everything the trustee does has to be and should be for the benefit of beneficiaries, and certainly in the best interest of the trust and nobody else, including the trustee. Any activity by the trustee other than that can land the trustee in a breach of trust litigation, which in some cases could cost the trustee out of his own money that he's earned from the business of doing trusts, anywhere from tens of thousands even to millions of dollars, depending on the nature of the breach. So clearly, while you can set up a trust for $50,000, you should know by now that the business of trust is not a petty shop business, even though we could have a few petty shoppers around. Anybody can set up a trust for literally any amount of money. And when I say any amount of money, I don't mean $500 to $1,000. I mean somewhere in the range of a minimum of $50,000. Anything under $50,000 doesn't make it worth anybody's while. But for somebody who earned a small income in their lifetime, or they managed to maintain maybe a piece of property somewhere that has a small property value, or even a life insurance benefit, they can establish a trust that says to the trustee, whoever that trustee might be, look, when I die, make sure this money goes to X, Y, and Z. Make sure none of it goes to A, B, and C. Okay? So you don't need a lot of money to establish a trust, but trust deals trust accounts go well into the millions and billions of dollars in some cases. I suspect, for example, the Bill and Melinda Gates Trust would have billions of dollars in that trust going through year after year, long after they're dead. I'm sure that trust has already been established, and so the trustees of that trust will be dealing with billions of dollars for the foreseeable future, okay? Perhaps even indefinitely, unless something really contrary goes on. All right, so this trust investments thing is a very big deal for the Bill and Melinda Gates Trust. God forbid, imagine the kind of investment specialists that they would have to employ in order to. Okay. So that alone is a very interesting exercise. And again, whatever it is, it's for the benefit of beneficiaries and must be in the best interest of the trust. Anything short of that is a possible breach. Okay. Notice we are told also that trustees invest trust funds to what? Protect and preserve the trust assets from?
Loss.
Yes, from loss. All right. And to maximize the profits that may be gained from investing. So that could be a simple task if it's a small trust, or monumental task if it's a large trust. Okay. Especially protecting the assets from loss. If you seek to maximize profits and don't quite hit the mark, nobody's going to be too upset with you, perhaps. But if you start accumulating losses as a result of not investing properly, then all and sundry beneficiaries will come on your head as trustees. And I can assure you, they will be calling Scott and every other lawyer in the Bahamas to litigate. Because when it comes to money, I think you have a fair idea that people are not patient, and they're not tolerant, and they are downright mean sometimes when it comes to money. All right, so for trustees, it's something that they have to keep in mind. It's the essence of this particular unit, and it's very fundamental to the well-being of the trustee. Because as Scott mentioned, as a trustee, unless the circumstances permit it, you cannot just sit on the trust assets and do nothing. That's the problem. But because you cannot do nothing, then you have to find the appropriate assets, the appropriate markets in which to invest these assets. And that is not always an easy task. Finding a safe environment to invest for reasonable returns without putting the trust assets at too great a risk. Because if the beneficiaries get wind that maybe you're investing in an area that you shouldn't be, they're going to sue. They're always looking to sue. Okay? And remember, whenever beneficiaries win a suit, the trustee has to pay not out of the trust assets, but rather out of his own revenues. Okay? So trustees are not happy about these lawsuits that are being brought by beneficiaries, because if they lose, it costs them money from their own coffers. And sometimes, depending on the nature of the case, it can cost them their trusteeship. Because sometimes beneficiaries will then go ahead and change trustees. They don't like you anymore. They don't trust you anymore. They don't trust your competence to invest their assets in the trust anymore. That's how it works. All right. Notice how the next paragraph opens up. It says that trustees invest funds, what? The expectation of yielding what?
Reasonable income.
Yeah,
And
reasonable
capital
income
appreciation. Mhm.
and capital appreciation. Now, for those of you who may not know what those two terms mean, even though they're supposed to be pretty straightforward at this point, the question must come or maybe arise in your mind, like, what income is reasonable? Doesn't specify an exact dollar amount. So what the hell is reasonable? And that's part of the trustee's dilemma. They have to come up with an income that is reasonable. And what might be reasonable to the trustee may not be reasonable to whom? To who?
Beneficiary.
Yeah, the beneficiary. Of course. Okay. It's like what's his name? The only guy. Let me pick on the only guy. It's like Kermit. Kermit, are you there?
I'm here. Mhm.
Okay, Kermit. First of all, are you married or single?
I single.
You're
I young, you know. I young.
You're young?
Mhm.
Okay. How young, Kermit?
I am 25.
Oh my God, you're
But it's
worse
a
than,
baby.
yeah, you're worse than doggone Anisha. Anisha's a baby in Pampers. Yeah, yeah, yeah. You can't be thinking about getting married. You're still trying to figure out who the hell you are, which is the other thing. But let's say that one day when you get married, okay, and you like doing the best you can, and then that you think is reasonable, and then your wife says, "Kermit, I don't think what you're doing is reasonable enough," and you're like, "But I think it's reasonable." And she's like, "But I don't think it's reasonable." How do you resolve that?
I know this, but I don't think it's reasonable. She don't think it's reasonable. We had two different conflicts. Two
Indeed.
different.
And this is what happens when a trustee is investing trust assets to determine a reasonable income, and then some beneficiary says, "I don't think that's reasonable. I think that's too little. I don't think it's enough. I don't trust this trustee to invest the funds adequately. Maybe we need to change." So even though you're just swinging wildly, doing your best to yield a reasonable income, your beneficiary may not think so, but that's the job you have. Hopefully, the beneficiary or beneficiaries will feel satisfied with you more than they are dissatisfied. But it's a tricky gray area. Okay? Capital appreciation, on the other hand, is that original investment that was made into the trust fund. So if you open the trust fund with $50 million, part of the trustee's job is to see whether or not they can get that original capital increased from 50,000 to a higher amount. Certainly they have to be careful that the original capital does not what? Go down in value. Like something doesn't happen to cause the original capital to decrease from 50 million to something 40 million. You'll have a riot on your hands overnight. Okay. So that's the trustee's job. A reasonable income, capital appreciation. Okay? Now, does anybody remember who a life tenant is? A life tenant.
Person who's benefiting, I guess the initial beneficiary who's benefiting from the immediate income of the.
Yeah, that beneficiary who will be getting a life benefit until they die. That's why we call them life tenants. And so that reasonable income coming from the trustee investment has to be consistent and reasonable, because the life tenant is expecting to be paid their share until they die. Once the life tenant dies, then the income commitment is not as strong, but the capital investment remains strong because the remainder men are interested in the capital, the original investment amount. Who are the remainder men? Anybody remembers who the remainder men is?
That's who would benefit after the life tenant, once the life tenant dies.
Yeah, once the life tenant passes on, let's say the trust comes to an end at the end of the life tenant, then those who are left as beneficiaries expect that the capital base will be the same or more. They certainly don't want to have less because they will be looking to get their share. and they don't want to get their share of less. All right. So immediately, we're not even off the first page yet, and the responsibility of the trustee and investment is a burden. I don't know about you, but every time I have this lecture, I feel that burden. It's a huge responsibility. Okay? Huge. In the case of Repower, what does that case talk about?
Mhm.
The trustee purchased a house to be occupied for a beneficiary.
Yeah, and that's all well and good if that trustee has the authority to do that. But what money do you think that the trustee will use if they purchase a house for beneficiary, income or capital?
Income.
I know it would seem that way, but typically the purchase of the house, because the house is another capital asset, they would normally
Oh,
purchase it with capital. So if the trustees think about purchasing a house, then they're gonna be thinking about using some of the original capital that was used to set up the trust. And which beneficiaries are going to be interested in that, income or capital? Capital, the remainder man, remember? Anything that affects the end amount of money they're gonna get, they're interested in that. So if you're buying the house and it isn't coming out of income, that's gonna be a problem for capital or remainder man. If you're buying a house and it comes out of income, that's gonna be a problem for home, the life tenant.
for life
Yeah.
tenant.
So just when you think that being a trustee is a piece of cake, you can see very well that it might be a piece of cake in some instances, but there are other kinds of trusts that can create all kinds of problems potentially for the trustee. Okay. Notice almost to the end of that paragraph, we are told the trust instrument often provides express powers for the trustee. What are express powers?
Written.
Yeah, written powers. All right. But wherever they're not express powers, what happens then? Then the trust,
Go to the
yeah,
act.
the trust, if they're not in the trustee, then the trustee has become restricted. And now it's to move to the trustee act to see if there's anything or any guidelines in the act with regards to investing trust funds. Have you guys actually looked at the trustee act at all so far?
Yes.
Okay. So that means if you go into the table of contents, you'll see a section that deals with investments.
Mhm.
And so if you're curious, and you should be, I would encourage you to go into the Trustee Act sometime during the weekend lockdown.
We're locked down anymore.
We're not locked down anymore?
You must see me in after 6 when me home.
Yeah.
Everybody on the
Yeah.
road.
Yeah. During the day when you're home and after 6 when you're home, take a look at the Trustee Act and see what it says about trustee investments. Of course, part of the academic side of this stuff is if you don't need to know the whole act on investment, you just have a look. And if you have any questions about it, make a note. When we come back, you can raise it, any question you might have. But you can see we're not even out of the booth yet, and all of a sudden the trustee has all kind of problems concerning investment duties. Okay, so I've talked enough already so far. I am going to engage somebody to help us bump along. Since Anisha started out, I won't call her first this time, Anisha. I'll start on the other side, which is Siobhan. Siobhan, are you there? Is
I'm
that a
here.
yes?
Yes, I'm here.
Yes, absolutely. So why don't you start us off then with the trustee's investment duty?
Okay. In trust law, trustees are expected and required to act as a prudent man of business with regard to the investment of trust property on behalf of the beneficiaries of the trust. To supplement this standard of care, trustees must perform certain established duties in relation to the investment of trust funds, namely, a trustee must not invest in risky or hazardous investments unless expressly provided in the trust instrument. A trustee must have full information about an investment before he makes it. A trustee owes a higher standard of care where it is a professional trustee carrying on the business and providing advice on managing trust funds. A trustee with a power of investment should undertake periodic reviews of the investments held in trust. The review should take place at least annually, where the purpose of the trust is to provide for financial assistance of the beneficiaries. The beneficiaries' best interest will usually be their best financial interest.
Stick a pin for a second, Siobhan. Let me just say something about these 4 points before we move on. All right, notice number 1, do not invest as a trustee in what? Hazardous, risky investments. You shouldn't even do that with your own money, correct?
Correct.
So if somebody comes to you with some deal that is too good to be true for you to invest your hard-earned $5,000 it took you 1 million years to save, you would want to be careful about that, wouldn't you? So you would, if you're prudent or wise, you would tell them, hell no, and don't call me back. How the hell you can come with that doggone risky investment with my hard-earned money? So trustees are supposed to be feeling that way when they're dealing with beneficiaries' assets of the trust, period. Okay. Number 2, the trustee must have what? Full information about the investment. Don't make any half-cocked, half-dead decisions with money that is not yours. If you wouldn't do it with your own money, how the hell you'd want to do it as a trustee with the beneficiary's asset? Don't do it. That's all it's really saying. And the reason why it's saying that, because there are some trustees out there who are reckless with trust funds. And even though the rules are clear, they still take risks, hoping that they would get away with it, okay, for whatever reason. And we're being asked here, don't do it, trustee. Okay? Notice number 3, the trustee owes a what? Higher standard of care, especially if they are a professional trustee. Now, does anybody know who the other type of trustee? If you're not a professional trustee, who are you? What type of trustee are you?
Individual.
You're an individual trustee. And so as an individual, you're not expected to have all the knowledge and resources like a professional trustee in a trust company. All right, so there's a little bit of latitude for the individual trustee. Doesn't mean you can act reckless still, just means that folks will consider your situation in terms of, okay, maybe you didn't know, don't do it again. But for professional trustee, there's no excuse. You have accountants, investment managers, lawyers, all kinds of people you can access in terms of making these multi-million-dollar investments. Don't play around with them. Deal with them with care. All right. And then finally, notice a trustee with a power of investment should what? Undertake periodic reviews. Don't give your investment managers or your outsource investment people the authority to invest $50 million and you don't go back to see what the hell they're doing. They must come back to you on a regular basis, weekly, monthly, quarterly, whatever the case might be, and keep you up to date on those investments and satisfy you with evidence that those investments are earning the proper returns. See, the reasonable returns. If you're not doing that, sooner or later, those guys are going to get comfortable. They know you're not checking. They're going to start to take greater risks. And before you know it, all hell breaks loose. And remember, even though you might delegate the investment functions to investment professionals, in-house or outside as an outsource, at the end of the day, who is ultimately responsible? The trustee. Okay? So at the end of the day, if the investment people mess up and you don't check on them and things go wrong, they could run off. You could sue them later, but you're the one who's going to get sued first. Okay? So you have to check on what's going on. Absolutely important. All right. Okay, keep going, Siobhan.
Okay, LJ, Lindley, stated in Re Whiteley that the duty of a trustee is not to take such care only as a prudent man would take if he had only himself to consider. The duty rather is to take such care as an ordinary prudent man would take if he were minded to make an investment for the benefit of other people for whom he felt morally bound to provide.
Okay.
Additional,
I think
Mhm.
that's pretty clear. That's a little old English. But if that case comes up repeatedly, it's all it's saying is when you're dealing with trustee funds, act as a prudent man would. Be wise, don't take any unnecessary risks. Consider your moral obligation. It's not your money to do nonsense with. But some trustees are constantly trying to get away with from time to time, even as we speak. All right? Okay.
Additionally, L.J. Cotton in the same case stated, trustees are bound to preserve the money for those entitled to the corpus in remainder, and they are bound to invest in such a way as will produce a reasonable income for those enjoying the income for the present.
Now, let me say something again while we're on it. First of all, what do you think corpus and remainder means? Who are they?
The corpus is the initial one.
Somebody said
Is
it.
that the initial and
Remainder,
The corpus itself is the initial investment, but the term corpus in remainder, somebody said it, I think somewhere.
the remainder man.
Yeah, the remainderment, okay? Literally it means the body for the remainder. In this case, whatever, the body being the what? The assets or the initial capital investment for those who are designated as remainderment. So we're saying here, the trustees have a duty to preserve money for those who are entitled, who will be left after all life tenancy responsibilities are paid. So they cannot be reckless with the original amount put into the trust, because at the end of the day, the remainderment are going to be expecting to get what? Their share. And if they don't get their share as designated by the trust instrument or by law, they are going to be really pissed. And I guarantee you they will sue. Okay? And then we have this other expression where we talk about produce a reasonable income from those enjoying the income for the present. Who are they? Enjoying income for the present.
Life tenant.
Life tenants. Okay? So I'm happy that you guys can see that connection. And those of you who didn't see that connection, you see that connection. And this is the whole gist of the trustee investment responsibility so far. So even if you don't remember all the other gobbledygook so far, what you should remember is that we have these life tenants and these remainderment, and the trustee in making investments must be prudent and consider the not only the life tenants, but also the remainderment. All right, keep going, Siobhan.
In the Nestle case, Jay Hoffman emphasized the importance of trustees making investment decisions in the context of equally and fairly balancing the needs and requirements of the different classes of beneficiaries, whether they are capital beneficiaries or remainderment. The trustee must act fairly in making investment decisions which may have different consequences for different classes of beneficiaries. There are two reasons why I prefer the formulation to the traditional image of holding the scales equally between tenants for life and remainderment. The first is the image of the scales suggests a weighing of knowing quantities, whereas investments decisions are concerned with predictions of the future. Investments will carry current expectations of their future income, yields, and capital appreciation, and these expectations will be reflected in their current market price. But there is always a greater or lesser risk that the outcome will deviate from those expectations.
Now,
A judge.
let's say this, sorry, for those of you who may not be aware, for your own, that's why I tell you this trustee stuff has personal implications where even though you may not be a trustee. Think about your own money. Whenever you invest in anything, are you guaranteed positive returns?
No.
No, the only investment that you might be guaranteed a positive return may be if you invest in a fixed deposit. Provided, well, fixed deposits aren't paying hardly any returns these days. But whenever they start paying bloody returns again, then you can expect that whatever the interest is on your fixed deposit at the end of 6 months or a year, whatever the case may be, you get it back. You get that amount. Also, if you invest in government securities like treasury stock, treasury bonds from the government investments in those areas are usually pretty much safe and secure and guaranteed. Once you step out of investments in CDs and government bonds and stocks, now you're getting into investing in companies, stocks and company bonds, and the stock market and derivatives and exchange funds and all this kinds of stuff, many of which are very risky investments. And so, or even if you invest in somebody's business, if the business fails, what do you get back?
None.
Nothing. Okay, so for the most part, investments have a risk attached to it. Sometimes the returns are fantastic. Sometimes the returns are not so great, and other times you lose everything you've invested. Okay, so even as an individual, you must be thinking like a trustee sometimes, like a prudent man. If you don't have a whole bunch of money to lose, then you'd better be thinking like a prudent man, even in your own personal life. So if somebody brings you a deal that's too good to be true, you need to check that out. Because if that fails, you lose all of your investment, whatever that is. Okay? And this is what we're talking about with regards to the trustee. They cannot be reckless with money that is not theirs. It's the beneficiary's money. And they must always keep two groups of people in mind: the life tenants and the remaindermen. Okay, keep going, Sven.
A judgment on the fairness of the choices made by the trustees must have regard to these imponderables. The second reason is the image of the scale suggests a more mechanistic process that I believe the law requires. The trustees have, in my judgment, a wide discretion. They are, for example, entitled to take into account the income needs of the tenant for life, or the fact that the tenant for life was a person known to the settlor and a primary object of the trust, whereas the remainderment is a remoter relative or a stranger. Of course, these cannot be allowed to become the overriding considerations, but the concept of fairness between classes of beneficiaries does not require them to be excluded. It would be an inhuman law which required trustees to adhere to some mechanical rule for preserving the real value of the capital when the tenant for life was the testator's widow, testator's widow, who have fallen upon hard times, and the remaining man was young and well off.
Okay, thank you, Siobhan. So again, these imponderables actually go a little further than just black and white. And this is what the case and the justice was trying to say. Yes, the trustee has a responsibility on the one hand to exercise prudence, etc. But on the other hand, sometimes we have some discretionary issues. For example, if the trustee had to consider the difference between the life tenant, who is the wife of the settlor who established the trust, and the remainderman, who is probably a long lost relative or charity or some other beneficiary of quote unquote lesser importance than his wife or her husband, then the trustee might be more inclined to consider in the interest of the life tenant in terms of his investment practices in order to preserve the trust so that she or the spouse can get what is due during their lifetime, as opposed to the remainderman, who may not be so concerned about the capital side of things, because the remainderman is a charity, or the remainderman is some 3 dogs in a kennel, or whatever, whoever the remainderman might be, not necessarily somebody that is close and known to the settlor or even the trustee. All right. So again, these are all the discretionary issues as well that come up while the trustee is trying to determine what investments are appropriate and for whom and why. It is not always an easy task. And the last sentence talks about the testator's widow, where if she is having a difficult time, the trustee may have to make some decisions to help her at the expense of, say, a remainderman who is a young person and who already has money of their own. If that is the case, then he may not be so prudent in worrying about such a remainderman. He may be even imprudent sometimes if it means helping the widow of the settlor in terms of the investment decisions that he makes from time to time. So you can see there's an academic side to the trustee in being prudent and following the trust instrument, following the law. And then there's a discretionary side to it where he may have to look at a spouse who's fallen on hard times versus a remainderman who is young and well off and quite capable of looking after themselves. Of course, some remaindermen who care if they're young or well off, they still will argue and sue about what they're entitled to. You follow? But again, the point here is to make sure that students are at least aware of all of these imponderables, that's what we call them, things to think about, to ponder if you're a trustee, right? And again, like I said, eventually you'll figure out that these things are not only plaguing trustees, they're also plaguing you somewhere in your life in terms of how to manage certain things. All right. Thank you, Siobhan. Let's see who's going to be my next victim. Kermit, you're next on my list. Express powers of investment. I think that's next.
Okay, express powers of investment. It is a general principle of trust law that express powers of investment within the trust instrument will be construed by the court according to the ordinary and natural meaning of the words used. Under the equitable principle that he who asserts must prove, a trustee wishes to argue that a particular investment falls within an express clause within the trust instrument must prove that it actually does.
Okay, so
A
stick a pin
typical
there.
general
Sorry, stick a pin there for a moment. Couple of things we want to look at before it gets lost in translation. First of all, let's go back to the term express powers of investment. Usually, if there are express powers of investment, we're talking about powers that are contained already in the trust deed as established by the settlor. If the settlor gives written instructions about how the trustee should invest, the trustee has no discretion. All right. He must do exactly what the instrument says, even if he does not agree, even if it's going to hurt ultimately the life tenant and or the remainderman. That is an absolute thing that you must know if you're a trustee. It has nothing to do with whether you agree with it. Once it's written, you must. Now, if you violate it, and then when you are sued, you go to court and said, I violated because it was unfair, you will be found wanting as a trustee. The courts will read the language as it is in the deed, and you will be charged accordingly. You will be found guilty, and whatever the penalty is, you will have to pay. Doesn't matter if you agree or not. Doesn't matter if it's fair or not. Once that deed says X is the way to invest, do yourself a favor as a trustee. Do it. If it fails, you have a remedy. Your remedy is you followed the trust deed, and that's how the courts will construe it. Hence, he who asserts must prove. Okay? And that goes for everybody in this room. if you have a case against somebody and you take it to court or anywhere, you have to prove your case. If you cannot prove it, dog eat your lunch. Does it mean that you're not right? Of course it doesn't mean that. But that's how the law works. He who asserts must prove. So if you say that somebody stole your wallet, you have to prove it. Kermit, when you get married one day, if you say you want a divorce because your wife is committing adultery, you have to prove it. And unless you have proof of it, you have no case. The same principle applies to the courts. That's how they're going to read it with regards to express written powers of investments. Okay? Very important. Some trustees violate those express instructions, and then when it goes to court, they said, "Oh, I did it because it was unfair. She was old and decrepit, and they had a child who was handicapped, and my heart wouldn't allow me to do it." Well, then your heart will have to pay whatever the penalty is, because that's how the law works. Okay? All right, keep going.
A typical general investment power with a trust instrument is settled below. Any monies requiring investment hereunder may be invested in or upon any such investments of whatsoever nature and wheresoever situate, and whether producing income or not, including the purchase of any immovable or movable or any interest therein, as the trustee shall in its discretion think fit without being limited by any specific powers expressed therein.
Okay.
There are certain investment clauses which also give trustees the power to vary investments, which is said to be an implicit power nonetheless. A power of investment which requires the consent of a third party may also be allowed. However, such a power may not have any fiduciary obligations attached to it due to its very nature, unless the context within the clause appears requires it. For income generation, the trustee must invest in investment, where the capital value does not fluctuate, but the rate of investment, the rate of interest may vary with economic circumstances such as cash or investment in corporate bonds. If they decide to invest cash, trustees must be mindful of the reputation and stability of the financial institution that they are investing and the rates of interest being paid on their cash investment.
Okay, so we stick a pin again for a moment. Kermit, going back to that little quote there, where we say a typical general investment power within a trust instrument might be as follows. And so whatever the instructions are within this particular instrument, we are bound to carry it out whatever the circumstances. Okay? There are no discretions. Then something else happens. All right, we are told that there are certain investment clauses which give the trustee the power to vary investment, meaning if it's, even though there might be some express term as in this quotation, sometimes there's a clause that might allow for variation. If there's such a clause, then the trustee needs to find it and make sure that they have the authority and the power to vary. Okay. Also, sometimes the person's a third party, like a protector, might be able to give some instructions about how to invest. But again, wherever there's variation and the consent of a third party, these things must be clearly stated in the instrument, giving the trustee the authority to come out of the normal express terms of the investment conditions. Very important. Very important because sometimes trustees continue to find ways to violate the instrument. Sometimes they seek to take shortcuts for, they feel sorry for a beneficiary, something is not fair in their discretion, and they, even though they realize that they don't have the authority to do it, they sometimes still take a risk, right? So if you're in the world of trust at all, that's something to be thinking about. Notice also when there's a power, whether it's a third-party power or vary, there's no fiduciary obligation. The only person who has a fiduciary obligation is the trustee, him or herself. Okay, so we have to be aware of that. The final authority, just like investment decisions, lies with the trustee. Okay. All right, keep going.
Though there may be an inclination to invest in financial institutions with higher or more competitive interest rates, it is important that the protection and preservation of the cash investment take priority, as the fiduciary nature of a trustee's duties is dependent upon their actions in preserving trust property in the best interest of the beneficiaries. To encourage capital growth in relation to the trust fund, trustees must trustees may wish to invest in fixed interest securities, stocks, uh, debentures,
Mhm.
or share of publicly traded companies, since they provide long-term growth and stability that is advantageous to the increasing capital for capital beneficiaries. The investment of trust funds are normally assessed and determined by the trust committee, who is required to act in accordance with the terms of the trust and in compliance with the parameters of the Trustee Act 1998 and Trustee Amendment Act 2011 regarding trust investments.
Thank you, Kermit. So that's a mouthful about the trustee's responsibility with regards to investments. If we back up a little bit before we go further, a little bit to the middle, where we are told that if we're seeking to generate income, okay, then the trustee has to get involved in a certain type of investment, okay? As opposed to if we're seeking to increase capital, then the trustees to consider certain other types of investment. The other thing that's important is to consider the reputation and stability of the financial institutions where you as a trustee are investing trustee funds, okay? Sometimes financial institutions that are offering very high rates of return, which can make a trustee enthusiastic, a little greedy about what's coming back into the trust, can cause them to take risks in certain financial institutions, because sometimes those financial institutions that are paying significantly higher risk than the market, they are sometimes risque, we call them, and subject to liquidation and closure. And if that happens, for whatever reason, then the trustee finds himself in a very precarious position if those funds are lost. Okay? So it's not good enough just to make an investment seeking returns on interest of one kind or another, but the trustee must also determine, who am I investing this trust money with? Is it a reputable institution that I can rely on to keep the original capital safe while I'm seeking to earn interest on the investment? So the highest rate is not always the best rate, unless it's in a safe environment that you can pretty much guarantee your beneficiaries that their assets are secure. That's the most important thing. If you have any doubts about the financial institution, doesn't matter what they're offering, you have to use your discretion and perhaps decline. Okay? That's in terms of income for the trust. If the trustee is thinking about long-term capital growth, then as he indicated earlier, he must be thinking about stocks and bonds and debentures, hopefully being traded in reputable companies. like Amazon and Microsoft and other companies that are established and been around long enough and that we consider safe and here for the long haul. Okay? And those are the kinds of companies that the trustee will consider. He will not consider a high-tech company that's just coming on stream, or a new pharmaceutical company that's only been around for a couple of years, who have not been tested and tried. Okay? We stay away from those kinds of investments in terms of our stocks and bonds, and we try to invest as trustees in those companies that are stable and known to be firm. All right. And then, of course, last but not least, the thing he mentioned, that these investments are not done through gut feelings. The trustee alone does not sit down at home and decide what is going to be invested, especially if it's a professional trustee dealing with millions and millions of dollars. The trustee must sit down at what we call a trust committee, and the committee will decide, preferably called an investment committee, who will decide how the funds will be invested, with whom and how much, okay? And the committee has the responsibility of making sure that whatever decisions they take are made in accordance with the terms and conditions of the trust instrument and the Trustee Act and the amendments to the Trustee Act. Otherwise, they might find themselves in breach of trust, okay? And I think we all have an idea what breach of trust is all about. It is something that can lead to reputational damage for the trustee. It can lead to court action for the trustee. It can lead to the trustee being convicted of whatever the claims are and having to make significant fines. And if it really involves more than just that, mismanagement of assets, and gets into embezzlement and fraud, the trustee may also find him or herself in prison and obviously no longer running a trust company. Okay? So some food for thought for the trustee who does not want to follow the rules of investment. The price could be a very high one. Okay, Shadell, you next on my list. Shadell.
Okay. All right. The investment committee will often consider establishing an investment portfolio with a diverse investment securities such as cash deposits, government treasury bills, bonds, stocks, options, and other such securities. The overall investment objectives and strategy of the trust must be reviewed and assessed and customized to the needs of the different beneficiaries, as well as the nature and financial condition of the trust. It is important that the trustee committee understand the nature of the securities within their trust investment portfolio, as this knowledge will greatly assist in the overall management of the trust investment and ensure that such investments are made in accordance with the investment objective and goals of the trust. When necessary, investment advisors may be engaged by the trust to advise on and manage the trust investment portfolio.
So you can see then that this trust investment exercise, for obvious reasons, it involves a whole lot of money oftentimes, cannot be done haphazardly, okay? This committee has a very important function, a very crucial function. The decisions that they make in terms of the investments that they make have to be in line with the law, the instrument, and the prudent man concept, because any mistake can lead to all those things that I mentioned earlier, and eventually the downfall of the trust company itself. So they must constantly, and this is why oftentimes the trust committee, depending on the complexity of the trust decisions that they want to take, they may decide to take further advice by engaging an outside advisor, an investment advisor, who can come in and say, hey, here's my feedback on the decision you guys are about to make. I think it's a good one, or I think it's not so good. Here's what we need to do to make it better. And of course, who minds paying somebody who we believe is qualified to help us make that decision? After all, the consequences of a bad investment decision by the trust committee and the trustee could be huge, could have huge consequences. All right. Okay, keep going.
Care should be taken in the selection and supervision of the investment advisor in order to be afforded the statutory protection of Trustee Act
Sorry,
1998. It is
before you go on, let me just say something about the protections of the Trustee Act 1998. When you get a moment to look at your Trustee Act, you'll see that under investments, there are certain protections that are afforded the trustee if he selects an advisor who has certain qualifications and experience. If that advisor meets those minimum requirements, then the trustees, for all intents and purposes, is protected in taking on such an advisor. However, should the trustee bring on his friend who knows very little or not much or not qualified as an advisor so he can make some money for some reason, or even get some kickbacks from his friend who makes some money, God forbid, and then things go wrong, then the trustees know, because it will be found by the beneficiary's attorney who will sue that the trustee actually chose an advisor who was not qualified and who did not meet the minimum standards of protection under the Trustee Act of 1998. Okay. All right, keep going.
It is important that when the trustees delegate these responsibilities for investment advice and management on behalf of the trust, they do so with the utmost prudence and skill, as the ultimate responsibility for the protection and preservation of trust property is still theirs.
Yeah, so hey, you can mess around getting somebody who's not qualified and things get messed up. Just know, Mr. Trustee, that at the end of the day, after they're messed up, you are still responsible. You cannot say as trustee, oh, John Doe investment advisor advised me poorly or incorrectly. That will not stand up in court. The trustee will take responsibility by law, and then if the trustee suffers loss, he or she may then seek to sue the investment advisor in a separate action to see if they can get any satisfaction before the courts. Okay? Okay, keep going.
Additionally, trustees must ensure that the trust fund is not charged excessively or doubly
Yes.
for the investment advisory and management fees, particularly where an affiliate company or department of the same professional trustee carries out the functions of investment advisory and/or management services. If this case exists, it is recommended that the value in the trust asset it is recommended that the value in the trust assets in the investment fund be excluded from the calculation of other trust assets when trustee fees are being determined.
Okay, now, in essence, what we're saying here is that sometimes some trustees charge excessive funds for, or some trust funds might be charged excessive funds by investment advisors for some reason for their investment advisory services and management fees. The problem with that is sometimes because investment advisors know that certain trusts are like rich, they have tons of money sitting in them, they don't always prepare a bill like lawyers and others that is quote unquote considered a fair bill. Sometimes they charge excessively, and sometimes they're brought before the courts for this action. So they are encouraged not to do that. Sometimes also some trustees have what we call subsidiary companies, which provides investment and management services as a separate service, but they are owned by the trustee. This is sometimes considered to be a conflict of interest, but sometimes it's allowed, and whenever it's allowed, those companies are expected to charge a reasonable fee for their services. Okay, so in any event, whether it's the management, the investment advisor, or the management company owned by the trustee, all parties are encouraged to be fair in their fee assessment and not try to gouge the trust fund because it has a ton of money sitting in it. Okay, all right, keep going.
In addition to the proper selection and supervision of investment advisors on behalf of the trust, the trustees should obtain the relevant tax opinion as and where necessary, subject to the provisions with the trust instrument, in order to minimize any negative impact that certain taxes may have on income generation, capital growth, or distribution of income or capital to certain beneficiaries in certain tax jurisdictions.
Does anybody have any idea what that mumbo jumbo means, that little paragraph? What do you think they're trying to say?
You have to consider whether your investment would incur a high amount of taxes, whether it would,
Indeed. Yeah. Is this investment going to incur a high amount of taxes? If the answer is yes, should we proceed or not? Absolutely. Because if the tax rate is prohibitive, then chances are that the investment is not worth the effort. Absolutely. So the whole idea is, even though the trustee has the responsibility of seeking out investments in order to grow the income of the trust, if the tax implications are not favorable, then they're required to exercise the prudent man judgment again and not engage in investment. Okay, absolutely. Because some jurisdictions are what we call high tax jurisdictions, and other jurisdictions are low tax jurisdictions. Which one is the Bahamas?
no.
Yeah, no tax jurisdiction.
No,
Which is one of the reasons why the OECD and FATF are running us down now and keep putting us on the blacklist, because they want us to become a something tax jurisdiction other than no. Okay, so this is one of the reasons why a lot of trusts businesses in this jurisdiction. When I say this jurisdiction, I mean the entire Caribbean, the Cayman, the Isles of Man, Guernsey, all these offshore jurisdictions in this part of the world. They're in this part of the world because we have either low tax or no tax. Okay, and of course the rich European countries are upset about that because they're not happy with all the money that's coming this way in the form of trusts and investments and all that stuff. They want it back in their home country so that they can continue to charge them high taxes. And people are always in the offshore jurisdictions looking for a way to pay lower taxes or no taxes. And so the battle rages on. Okay. Does anybody in this group think that eventually they're going to get this jurisdiction, including the Bahamas and Cayman and others, to start charging some kind of tax?
Yep.
Yeah, they're going to eventually force us to do it. Otherwise,
Especially how Biden is the president now.
Especially, absolutely. God help us. Yeah, dog eat our lunch in this part of the jurisdiction. And that's what a lot of even Bahamians don't know, but they hate Trump and they don't know what they're hating.
Yeah.
Because the
Trump
devil himself is now president. Take it from, all right?
Yeah.
You can see from the color of my hair, I know Joe Biden very well. All right? And trust me, he is not who people think he is. As all the devils are, they're not all, you don't always see their horns, right?
Nope.
And some of the worst devils in the world are the ones who come off as sweet as honey, are they not? Mm-hmm. And they come off as sweet as honey, so you cannot detect them. So that you will open up your door and your hearts and your wallets and your vote. So how about that? So once they get in, then the horns will come out. But until then, they will act so sweet you will not, notice my tone, believe it. I'm here for you. I'm here for the people. I'm here to bring unity to this country. Unity that we all need as purposeful human beings. That's why I'm running for president or prime minister or governor or pope or whatever the hell they want. And then when they get in, come to find out the hard talking guy that they figured was too brash, he's the guy with the big heart. And the nice, soft spoken person, they're the real snakes. Hmm. Do trustees have to be aware of this in their business as well?
Yes,
Yes.
sir.
The investment advisor who comes with a nice suit, smooth talking, is he necessarily the best one? Not
No.
necessarily. He might be, but not necessarily. The guy who comes says, look, this is not right with his tie on the side. I don't think it's chop it off on off. Man, this guy looks like he's crazy. Well, maybe, but you should still listen because he might be the guy who's going to give you your best what? Advice. You cannot tell by looking. Can you? Okay, keep going.
Okay. Investment powers in the Bahamas Trustee Act, 1998. A trustee may incorporate by reference into a trust instrument any of the provisions set out in the first schedule of the Trustee Act unless a contrary intention appears in the trust instrument. The provisions set out in the Trustee Act, which may be incorporated as the investment clause, is as follows. In the management and administration of the trust fund for the benefit of the beneficiaries, the trustees shall have the widest powers of investing, disposing of, and dealing with the trust fund, and of carrying out any transaction whatever in connection with the trust fund which is lawfully capable of being performed by beneficial owners, to the same effect as if such powers were expressly conferred by this instrument and specified in intenso, and such powers shall include, but are not limited to, investment in the purchase of or upon the security of such common or preferred stock shares, mutual fund shares, unit trusts, or other securities or commodities, including precious metals, bonds, notes, debentures, certificates of deposit, or time deposits, derivative securities, land, or other investment or property of whatever nature, and whether or not income producing or paying dividends or interest, and whether involving liabilities or not, or upon such personal credit, with or without security, as the trustees in their absolute discretion think fit, and the trustees may exercise or omit to exercise all or any of such powers in their absolute and uncontrolled discretion, as if they were the absolute beneficial owners of the trust fund.
Thank you, Shadell. Man, that is a mouthful coming from the Trustee Act of 1998.
Mhm.
For those of you who feel curious, during the partial lockdown this weekend, you may go to that particular section and have to look at it. But this, and they said it all in one breath as well. I only saw a few commas and no full stops until the end. They made a mouthful out of this thing. As you can see, they said that under the Trustee Act 1998, the trustee in the Bahamas or in this jurisdiction who have a similar act anywhere in the Caribbean or elsewhere, they have wide powers. You notice that? The only powers that are supersede the Trustee Act of 1998 is the trust instrument. And they said so, except where it is stated otherwise in the trust instrument. Because remember, the trust instrument is the ruling document. The Trustee Act only kicks in if the instrument does not deal with it. Okay? So you are guided as a trustee first by the instrument, by the instrument, by the deed, the deed. I don't care how you feel, the deed. Now, once you get to the Trustee Act, because the deed doesn't have the provision. Then the act, as far as investments are concerned, gives the trustee in the Bahamas and in this jurisdiction unbridled discretion, which means that they can invest as they see fit, when they see fit, how they see fit, and with whom they see fit. That's all well and good, except that they must still be guided by what? The prudent man concept. You follow, folks? So even though there's a huge latitude, they are guided by that. Because if they're not, the trustees in the Bahamas and in this jurisdiction have people called beneficiaries still. So even though the Trustee Act 1998 gives them a long leash to play with, wide investment powers, they still have to be careful, because if they piss off any beneficiary with all of this unbridled stuff that they have in their discretion, they may exercise or omit to exercise all or any of such powers in their absolute and uncontrolled, sounds like a doggone truck with no driver, as if they were the absolute beneficial owners of the fund. That's a lot of absolute power, but that power must be exercised with discretion. Otherwise, they will find themselves where? In court. Okay? And nobody is above the law. Are there any people in the Bahamas who's above the law?
Yeah.
Really?
They act like it.
Yeah,
Well, we,
the rich ones.
yeah, we have two groups. One who acts like it, and then those who really are.
Yep.
It's just that we don't really always know who the ones who really are above the law, because they always seem to get away with stuff quietly.
All the time.
Yes, while the rest of us can't even steal a loaf of bread. Not steal it, take it because we're hungry. How's that? No, they will not accept the fact that you're hungry, even though you might look hungry. They'll say you are a thiefer, and even though the courts are full, they'll still find space to drag you before the courts the next morning.
Put you in the paper.
Not only in the paper, in the front
On the
page.
news. Yep.
That time, all the real thiefers, they don't even catch them. Or if they catch them, they let them go like fish when you catch and let go. Or they ignore them like they don't see it.
Slap on the wrist. Yeah, that's it.
Absolutely. A slap on the wrist if they get caught. Other than that, they like turn the next way. Yeah. Okay. Sorry. It stinks. but that's unfortunately the situation that we have. But that's not only unique to the Bahamas. The world is messed up like that. Every country in the world has the same garbage. It's just that in some countries, it is 10 times worse than others, including the Bahamas. We have our little stuff going on, but we're like Boy Scouts to some of those countries around the world where this doggone corruption is rampant. At least in the Bahamas, we haven't gotten around to actually murdering people yet for stuff. In other countries of the world, you start talking about corruption, they don't hear anything from you, that you disappear from the face of the earth. At least we could still do stuff and still walk around and drive like this. Do it. And people like, can't let it go. But in other countries, it doesn't work that way. That's how deep the corruption is. Okay. Yeah. So even in our little corruption, not little, I don't want to say that corruption is little. In our corruption, we still fortunate so far. It hasn't gotten to that like really deep, intense, murderous level yet.
That disappearing now.
The disappearing, buried, can't be found, very dead thing. Yeah, absolutely. Absolutely.
Too nosy for you to disappear.
It's not that easy. Absolutely. The minute somebody doesn't show up, somebody starts talking right away. So yes, and maybe folks figured that out. But yeah, in our corruption, we still have some leverage. We're not the worst in the world, God forbid. All right. So the trustee has this unbridled thing under the Trustee Act, and in this jurisdiction and in the Caribbean in general, and the Americas, we have set it up that way so that we could persuade people to open up trust companies and be able to invest almost as they see fit. But that doesn't mean they should. And we know that from the beginning of this lecture, that while the trustee act says you could, you should, you have unbridled and uncontrolled, doggone absolute. Be careful, because some beneficiaries are still watching you act or no act, and they'll sue you, act or no act. As a matter of fact, we had a case a couple of months ago that ended up in the courts in the UK for a Bahamas-based trust. I'm not sure if they've made a ruling on that. Yeah, can you believe that? It's a Bahamas-based trust, but it went all the way to the high courts in the UK. I'm not sure the matter is concluded yet, but it was sitting in there for a couple of weeks. Well, it's an ongoing matter. Okay? So
I always got the impression that if the trust, if the Bahamas is the governing law of the trust, how would it end up in the
good
UK?
question.
UK court.
If the Bahamas is the governing law, it shouldn't end up in the UK courts. But perhaps
It's for UK citizens?
perhaps it may have been Bahamas jurisdiction, but the person involved may have been, a UK person. A beneficiary may have been a UK person,
Right.
perhaps. Or maybe there may have been a case where there was dual jurisdiction for some reason. So again, even though you may have the jurisdiction designated as the Bahamas, for the most part, any cases that are heard should be heard in the Commonwealth and would be heard here. But every now and then, if there's a glitch, or somebody set up a trust that they didn't think would ever get to a particular point, and then suddenly, after forever, it happens. Okay, it's like my boy Kobe, who always flew in a helicopter for years and years and years and years and years and years and years. So it was not even on his mind or their minds that the chopper would go down.
Now you bring me a wife,
Okay.
please. A
But
wife.
it's kind of like that. So yeah, it ends up in the UK, and all of a sudden the Bahamas trust becomes bloody world news, something no local trustee wants to see. All right. Okay, thank you so much, Shadell. Joanne, is that Joanne or Joan?
Joan,
Joan? Okay, Joan, you're up. In addition to,
in addition to the clause set out in the trust instrument, Section 4 of the Trustee Act 1998 gives trustees full powers of investing and of changing investments as any beneficial owner who is absolutely entitled, which will be exercised at the discretion of the trustees and in addition or subject to the provisions within the trust instrument. Section 5 of the Trustee Act 1998 gives the trustees guidance on the exercise of the power of investment and requires trustees to make, change, and retain investments as a prudent investor would, which narrows the general standard of care of a prudent man of business in making investments, trustees should consider the following. 1, exercise reasonable care, caution, and skill that an ordinary person would. 2, have regard to the suitability of trust investments in the context of the whole of the trust property, with a view to obtaining an overall balance of risk and return reasonably suited to the trust. And 3, have regard to the need for diversification of investment so far as the trustees consider it appropriate to the trust.
now stick a pin for a second, Joan. Notice, even though we have all that unbridled stuff earlier in the Trustee Act, Section 5 starts to narrow it a little bit and starts talking about the general concept of trust investment, such as the ordinary man, suitability for investment, and balancing risk and return, and considering diversification and trust investments so that you don't put all of your eggs in one basket. Okay, so it kind of narrows it a little bit in Section 5 for obvious reasons. You cannot just helter skelter. I don't care what act it is, because what are you doing eventually? Setting a trustee up for lawsuits. Okay, keep going.
Section 5(2) outlines that considerations that the trustees must have in relation to deciding whether certain investments are appropriate for a particular trust, including the size of the trust property, general economic conditions, and the intentions and wishes of the settlor. In Cohen versus Scargill, the question arose whether in selecting investments, trustees were entitled to consider non-financial matters. It was held that the trustees were in breach of trust if they failed to adopt the recommended investment strategy. Their duty was to act in the best interest of the beneficiary present and future. The power of investment ought to be exercised in such a way as to yield the best financial return by way of income and capital appreciation.
Mhm.
Under Section 6 of the Act, trustees are not only empowered to select certain persons to provide investment advice and expertise to the trust, provided that they, I guess, have the requisite
Yes.
knowledge, experience, and skill, but they may also be protected under law for any loss suffered by the trust in reliance on the advice of the selected investment advisor.
Now take notes. Take a pen for a second again. John. Take note that even in our Liberal Trustee Act of 1998, we have certain things in place where the trustee in making investment decisions is not given the leverage to act recklessly, even though he has the absolute power in his discretion to make investments and so on. If it doesn't fall within the context of the deed, if it doesn't, the various sections of the Trustee Act and the investments does have some cautionary issues in place. All right. So much so that in Cohen, the trustee got advice from an investment advisor, didn't follow the advice, was sued, and was found to be in breach of trust. Reason? They should have taken the advice of whom? The professional. The trustee did not take the advice and it didn't work out. And the trustee thought they'd make the decision outside of the advice of the professional, and that was deemed to be imprudent. And therefore they were found to be in trust. So again, the trustee cannot act recklessly, they must act sensibly, especially when it comes to investment of assets, to make sure that if they are not experts in the area of investments, that they get the right people with the right knowledge and the right experience and the right skills to do this thing. If they do this and something goes wrong after the advice they've taken, then the law will protect the trustee from any losses suffered by the trust, because they made the proper reliance on the professionals. If they do not rely on the professionals and rely on their own fundamental non-existing skills, then the trustee himself will be in breach of trust and will be made to pay. Okay, keep going.
Similarly, Section 13 of the Trustee Amendment Act 2011 allows the trustee the protection of law for any liability for loss occasioned by the trust where such trustee has acted on the instructions or directions of a power holder or failed to act in the absence of a direction from a power holder with responsibility for investment. Additionally, with regard the level protections under the law, a trustee will only be afforded such protections if they have properly discharged their obligations with regard to their selection or appointment of the investment advisor and the continuing supervision of such advisors to ensure that such agents act in accordance with the provisions of the trust and with the same objective of preserving and protecting trust property from needless loss. Therefore, while the trustee takes advice from the investment advisor, the investment decisions are still made in their name and the trustees are answerable to the beneficiary.
Okay, folks, so that is a very important paragraph. It talks about the trustee, no matter whom he selects, and as considering that they are qualified and professional in their jobs as investment advisor. A couple of things have to happen in order for a trustee to avoid being sued for breach of trust. One, as we said earlier, the advisor must be experienced and qualified to do the job. Two, the trustee must make sure that in addition to having a trained, experienced advisor, that they are constantly what? Checking with the advisor, monitoring what the advisor is doing to make sure to the best of the trustee's ability that the advisor is acting within the investment objectives. Because after all, at the end of the day, doesn't matter, the advisor is going to go home, and if things go badly, the advisor will not be liable in the face of beneficiaries and in the face of the courts. The trustee ultimately will be held liable. The only way the trustee can get out of any action taken by beneficiaries is by showing the courts, one, that they hired a qualified investment advisor, and two, that they were monitoring the investment process as required by the deed and or the law. Okay? If they can't do those two things, they might find themselves in breach of trust. Okay, keep going.
Once the trustee properly appoints and supervises the agents to whom he may delegate investment tasks,
May then go and sue the investment bank, but he'll have to satisfy the courts himself first. Then he can take a separate action against the advisor. Okay.
implicit in discharging their investment powers within the trust instrument or under the Act, a trustee must ensure that proper investment objectives are made and an investment strategy is created to invest trust property for the specific trust that he is administering. This is often done by the Trust Committee for Professional Trustees.
Mhm.
Once the investment strategy has been created and executed, the trustee must ensure that there are periodic reviews of the investments and the investment strategy in order to detect any changes in such investments which may cause loss. Investment management activities are usually conducted by stockbrokers, banks, trusts, accountants, or insurance companies. These services should be licensed to undertake this business. Other requirements is an experienced workforce, detailed procedures and research facilities, segregation of function, technology, and suitable premises.
Now, you can see already that in the life of a professional trustee that's managing tens of millions of dollars, and in the case of say, Microsoft Trust Fund, Bill Gates and what's in a trust fund, you can see right away there's a whole lot of stuff going on, a whole lot of professional people, a whole lot of skills required, and a whole lot of money being paid out for management and investment services. And as a result of that, the trustee has to take the greatest possible care that all of these persons who are providing these services are providing professional services to the trust. That's why in many cases, many of these persons have to be licensed practitioners, because so that if in the event that they are not competent or efficient in their jobs, that the trustee can now take action against them as licensed professionals, because they are supposed to know better, just as the trustee in his professional capacity is supposed to be better at his job as a trustee versus, say, an individual trustee. All right, okay, keep going.
As a
Final
part,
paragraph.
as a part of an investment advisor's compliance obligation, the advisor will start with agreeing the investment allocation model suitable to the beneficiaries and the trust. Attention to time frames, income needs, prospective beneficiary, and other relevant considerations such as tax.
Thank you very much, Joan, for that mouthful of stuff. So you can see right away that this thing about trust investments is no child's play. It is not just a matter of taking some money and putting it on a CD and just waiting for a couple of bucks to come back passively in interest. It is not that simple. As a matter of fact, there have been trustees historically who have put monies on CD and called it an investment, which it is, and still be sued because the beneficiary have said, first of all, you didn't find the best CD with the best rate. Secondly, you didn't seek to find any other fairly safe investment so that the trust fund could earn even higher returns. You just took the lazy route out, Mr. Trustee, put the money on a fixed deposit, the first one you came across, and then snoozed off to do what you wanted to do in that bloody trust company. And so you can't just take the quiet way out as a trustee. As you can see, you have all these trust committees and professionals and advisors, and all these people are involved in this huge conglomerate of muck just to make the proper investments alone. That's not the other parts of the trustees' work. That's just the investment side.
Mhm.
So you can see right away, a professional trustee operation can be made up of tons of different departments, from investments to legal to marketing to distributions to accounting to, and the list can go on, all of which are necessary to make this machinery work, called a trust company, or more so a professional trust company. So there are other players that come together to make this work. Anybody in this group familiar with any trust companies in the Bahamas? Since we're talking about them.
Yeah.
Who?
Yeah.
What about who works at CIBC? Joanne, you work at
Yeah.
CIBC still?
Yes, I do.
Okay. Do you know that CIBC has a trust company?
Yes, I happen to work there.
Oh, wonderful. So you have a great grand idea of the machinery that goes on every day in that bloody place, correct? Yeah, you make a couple of bucks, but it's a nightmare. And since they are always trying to save money, they don't want to hire extra staff. They want to pay you the same salary from one year to the next when you get an increase. And when you divide it by 12 months, by 52 weeks, you say, this is an itsy bitsy spider, like, man, for all this work I do. So yeah, CIBC has a trust company, Scotia Wealth Management is a trust company, RBC has a trust company still? Or they gave it up? Anybody knows?
Not sure.
Yeah.
I think Bank of the Bahamas gave theirs
Yeah,
up.
Bank of
I'm
the
not
Bahamas
sure.
gave theirs up, yes. Okay, I think, yeah, they sold off their assets to some other company. Oh, Bank of the Bahamas, poor baby. I guess, yeah, they're still trying to fix stuff there. And there are a lot of other smaller offshore companies in and around, several hundreds of them in and around the Bahamas, doing offshore trust and investment business and corporate service businesses. Okay. By the way, some trust companies offer multiple services like trust services, corporate services, and also investment services. And then some offshore companies only offer trust services, some only offer investment services, some only offer corporate services. So there's a multitude of different things going on. So for those of you looking for exciting employment and prepared to take some risk by going offshore, then put on your goggles and dive in.
Mhm.
I wouldn't tell you it's all hunky-dory. It's not. It only seems greener everywhere. But, the greater the risk, remember, the higher the expected what?
Reward.
Yeah. And sometimes it doesn't always work out. But what the hell?
Let's try anyway.
Yeah, let it rip. Okay? I'll tell you a little secret about that. Just so you understand that this is not just a textbook discussion I'm having with you. I am not retired officially yet for some reason. Probably because my baby's still in university. That's probably bloody it.
For some reason.
Yeah. Yeah. First of all, he was born too bloody late. I should have had him like 10 years before.
Yeah.
But yeah, that's another thing. That's probably the reason.
How old is he?
My baby?
Uh-huh.
He's 23.
Yeah, he's a
Baby.
baby.
Oh my God.
Yeah. I have an older son though. He's 29.
Yeah.
Samuel the third. He's 29. But my baby's 23 and he was born too late to begin with. Even Samuel was born too flicking, all two of them were born too late. I don't know. By the time I was having my children, people I went to school with, their children are getting ready to graduate from high school. I'm like,
That's
what the hell
me.
am I doing?
Y'all
That's
was
you.
career driven, eh?
I don't know what the hell I was doing. I don't know what I was waiting for. I don't know. Because now all of them have grandchildren who are almost as old as my baby. And I'm like, what the hell am I doing? Yeah. Where was I? Oh, I'm not retired yet. But here's what I mean by the risk reward thing. Okay. When I first started my career, I started off as a banker at Scotiabank as a teller back in the day. Then after that, after about a year and a half, I went to work for Bahamas Customs because they paid me more money than the bank at the time as a teller. Can you believe that? Bahamas Customs, not knowing that was total madness. But anyway, it gave me a great experience with the public service and all kinds of other experiences you could never imagine. So after 2.5 years as a youngster, I finally got a job. Scotiabank called me to be a management training officer in the loans department, blah, blah, blah. So I spent a couple of years doing all kinds of loans, mortgage loans, business loans, commercial loans, every loan you could think about in your life, fighting with people that had an office in Canada, the whole thing. And then after that, I went to be a doggone financial controller for a couple of years in the transportation industry, and then the banking industry, and then the freaking hotel industry. And then that's the first half of my life. Then after that, I started a whole new life career as a private banker. I worked for a Swiss bank, flicking Brazilian bank, Filipino bank, Canadian, all this crap. But don't get me wrong, and all of that stuff. And then like this thing, that thing, the next thing. All of that in my lifetime, and I'm still not retired yet. And I'm thinking I should have just stayed at Customs, work for 40 years, and then go home and watch Netflix and have a beer. Why did I go through all that? Well, the reason why I went through all of that, it was risky business. Don't trust me, it was not like a walk in the park. You have to be really risky, bold, and determined to learn new things every time you change, new environment, new people, new culture, all that crap. I don't know why the hell I mess with that nonsense. But anyway, I did. Do I have any regrets? Oh, well, maybe I could have had a better pension at the end of the day. But hey, what the hell?
Was it more lucrative to do that for you? Or it was just a
Financially?
matter of wanting to learn stuff?
Oh, no. In my case, it was learning new stuff and more lucrative, because basically every job I moved to was a better paying job. That was the other thing, because I had all these brand things, like I wanted to send my kids to this school fee and that, like they were my babies, and I was daddy struck straight through. So yeah, so I did all that crazy stuff. But in addition to all that, I traveled all over the world, did all kind of other crap too, while I was taking those risks. See? There's risk, there's return, there's risk and there's return. If you're not prepared to take the risk, don't mess with that. Go somewhere and sit down until you get fat, 30 years past, retire and leave like my sisters and brothers. That's what they did. They work for government for after 25, 30 years, they're like retired. Now they're home having fun. Where am I? Teaching you guys, because I'm not retired. But that's okay. I have no regrets. And I just say that to encourage those of you who feel risky, take reasonable risks, just like the trustee. Don't jump into any nonsense, but take a reasonable risk and let it rip if you want to go that route. If you don't feel like you're that kind of person, don't do that. Wherever you are that you feel you're safe, cower right in that hole and don't move. Don't question anything. Don't challenge anything. They don't like that. Just like that.
Yeah, you're not. They don't like that.
No, they hated that. They hated that a million years ago. I wouldn't tell you how long, and you figure out how old I am. But a million years ago when I was a youngster, they hated it then. And they didn't like me sometimes because I raised questions about stuff like, why is that that way? And they're like, who's this young punk asking questions already? And he's only 22 or whatever I was at the time. And then when I was 32, like, he's only 32, who the hell is he? And then when I was 40 something, who the hell is he? Keeps questioning stuff. And they don't like that. Okay?
No, they don't.
No. they tell you they want things fixed. When you start fixing it, they get mad at you. They don't want it done like that. And yeah, they do all kind of weird stuff. Threaten your job, threaten this, threaten that,
Mhm.
just to shut you up.
Yep.
Okay? And since I was hard to shut, I didn't make noise, but I didn't shut up easy. I didn't shut up either. I was a professional inquirer about problems and issues. And they didn't particularly like that because it didn't always fit their corrupt, illegal, unethical agendas. Do you follow?
Yeah.
If you're not prepared to do all that stuff, don't mess with that. Just hang out somewhere and shut
Get
up.
smoked.
Or if you don't shut up, just like kiss butt and go with the flow if you're good at that. But that's not that wouldn't be my recommendation because I was terrible at kissing butt and going
Yeah, I
with the
can't do
flow.
it.
That's my problem. And so I was always in some discussion about what the manual said, what the ethical thing was to do, what the correct thing, and they hated me for that for some reason, even though that they knew that that was what was required.
Mm-hmm.
Follow? So it's a big risk messing with that stuff. And if you don't feel bold enough and emboldened, don't mess with that because that's a lonely, quiet road. But it's the right way to go.
Yep.
That's the problem with it. See? All right. So I just kind of said that to encourage you guys. If you feel like, taking a dive, jump, doggone it, within reason. Don't break your neck necessarily, but take a dive every now and then. You might be pleasantly surprised because I have absolutely no regrets whatsoever. All right. So who's going to be my last culprit before we break? Anishka, are you there?
I'm here.
Okay, why don't you finish us off, Anishka? We will get Anisha on Saturday. She'll be our first victim. Okay, Anisha,
Okay.
the
The review.
review.
Mhm. The review of investments in a portfolio involves a comparison of the market value of the investments with book value to ensure that profits, income are in line with expected returns. Other matters to be taken into consideration when reviewing investments are: one, book value of investment at time acquired or transferred, useful for tax purposes. Two, current market price and market value. Check to see if each investment has been valued at current market rates. Three, income yield return. Important in fixed trusts or where a reasonable level of income is required. Four, dividend interest income. Check against payment due dates and note made of any tax deducted. Five, strategy objectives. Highlight any changes and if applicable, whether the strategy objectives is still suitable. Six, diversification. Ensure portfolio is suitably diverse to reduce risk. Seven, liquidity and cash requirements. Review the required liquidity to meet short-term cash requirements and whether any adjustment is required to the liquidity portfolio percentage. Eight, indices, sorry. Benchmark against the performance of the portfolio in the market. 9, funds added, withdrawn. This will affect the valuation of the investment. 10, reconciliation of certificates held. This can be checked against the trust administrator's records or by the custodian.
Okay, before you do the last paragraph, notice there's a whole list of things that the trustee must be checking for as far as the investment portfolios are concerned. And remember now, some of these can be anywhere from a few $1,000s for a small trust to tens of millions and even billions of dollars potentially in investment dollars, which means that there's so many aspects of the portfolio. These are 10 of the key ones that must be checked on a regular basis by the trustee. Now you might ask the question, does the trustee have the skills to check these things? Hell no. That's why we have all those licensed professionals. Whoever is trained to do these kinds of checks in the investment market, the advisor, the investment managers, the accountant, the lawyers, whoever the hell is required to check the relevant sections of these things that need to be monitored, they're the ones that will be hired and paid and be expected to do a proper job as professionals to make sure that in each of these categories that there is liquidity, that the trust does have enough money to meet its obligations to life tenants and to other responsibilities, that the investment indices or benchmarks are connected to the market and are not too far off from market rates, that if there are certificates for shares and other investments, that those certificates are present in the vault of the company and that all the certificates are there, none have been lost or stolen or misplaced, and the list goes on and on. If any dividends have to be paid paid to the trustee from investments that are made, that the proper amounts of dividends are paid and collected and deposited into the accounts of the trustee. And all of these things are being done. That's why if you work for CIBC Trust or any other company, you see people running around oftentimes like a chicken without a head, because a whole lot of things are going on in a whole lot of departments, and a whole lot of stuff has to do with investment monitoring, something that some persons working in a trust company may never see, because this would fall under the trustee's investment department portfolio. Okay, the point is, the trust department, trust company has a whole lot of arms to deal with, and the trustee investment aspect, as you can see, is a whole animal in and of itself. And any mistake in any of those areas could result in the trustee being sued and even found to be in breach of trust, depending on how well these things are monitored. Okay, remember, beneficiaries are always watching. Beneficiaries always have people watching, and they're always ready and waiting to sue the trust if necessary, especially if they feel they're going to get more money out of the trust. Okay? Beneficiaries are not always nice people. Beneficiaries are not always required to be nice people, because not all trustees are trustworthy. A lot of trustees are found in breach of trust, convicted, fined, and so on, because they're not all as honest as they look in their suits every day coming into the office. All right, and then finally,
The trust administrator should ensure that he or she reviews and inspects the brokerage statements on a regular basis and provides the trustee or trust committee with information regarding the particular investments, the instruments relating to investments, and investment powers generally, pertinent information on the beneficiaries regarding circumstances, and any advice or recommendations by the investment advisor. In summary, the trust administrator should review the quality of the reports, information, valuations, and advice received, and not the fees charged. This should also include a review of the management agreement to ensure that an alteration is made if necessary.
thank you very much. So you can see everybody has a lot to do, and they're all considered professionals in their jobs, and they're expected to act as professionals act. The trustee, through the trust company, has the overall responsibility to make sure that all of these things are working. That's why we have a managing director in charge of trust companies, because they are the overall king of the hill with responsibility for the activities of the trust company. If something goes wrong, that person will be held liable on behalf of the company for all the problems, which is why they paid the big bucks, significantly big bucks. That's why they fight, kill, and maim to get those jobs, because some of them pay exceptionally well. And for those who are running their own underhanded, unethical, crooked programs and organizations that you never see until somebody is arrested or exposed, even more opportunities to make even more money, unfortunately. All right, so there you have it. If you had no idea before tonight what the trustee's job was as far as investments are concerned, I think you probably got more than you bargained for, a far better appreciation for the responsibilities of the investment side alone of the trustee's job. And that's only the investment side. When we meet on Saturday morning at 9 o'clock, we're going to have another interesting discussion about another aspect of the trustee's job, which is the trust accounting aspect of things. All right. So if you want to, you can go ahead and read ahead. For those of you who don't get to read ahead, not to worry. We will be starting off with Anisha on Saturday morning. If I forget to start with Anisha on Saturday morning, you guys are my witness. Remind me that she is first. All right. Any questions before we break for this evening? About anything?
Are we using the same link for class on Saturday?
I believe so. I believe so. If not, Miguel will send you a fresh link.
Okay.
I'll check with him. That's a good question. I'll check with him tomorrow to see which one it's going to be. Either way, if you don't get anything from him, we use the same link. If not, he'll send you a fresh one. Okay, good point.
Okay.
Any other questions? Don't forget to do the questions at the end. When we come on Saturday morning, we'll discuss the answers to those first for a few moments, and then we'll start our discussion on trust accounting. All right, if there are no other questions, then you guys have been wonderful. Have a great day tomorrow before we get together again, and I'll see you.
Okay.
Take care.
Thank you.
Good night.
Okay.
Good
Bye-bye.
night.
Good
Be
night.
safe.